Good morning, everybody. Welcome back to another episode of the Market Open. It has been too long, but we are back. It's been 3 days, long weekend. I hope everyone enjoyed. We are officially back to open up the markets. It is Tuesday, May 27th. And boy, oh boy, in the past 24 hours, that we have a bunch of headlines across the board that are affecting the pre-markets right now. Pre-markets are pretty damn green. And that's not really because of positive news about stocks, which there are some headlines, but rather positive news about bonds, particularly in Japan. Yields are coming down, which is very good for the US 10-year, US 30-year, which affects our stock market. So we are seeing some positive news around the credit markets across the world. That's what's affecting stocks right now. And overall, the sentiment's getting a little bit more bullish. You got some of these big banks like Morgan Stanley and JP Morgan coming out saying that they are firmly bullish and they believe the next 5% move is going to be up versus down. So we'll talk all about that and get into it. We also have Nvidia tomorrow. That's a big one. That's a big one. We got Nvidia tomorrow. We'll be live covering it. Tanner, Jose, and I will be live at probably 3:30 p.m. Eastern. And that will be an important one to talk about. So we'll go through Nvidia earnings previews today as well. And some of my thoughts on can Nvidia really beat and raise and give us one of those raises that you kind of need for the market to be okay with some of the headwinds that Nvidia has had. And if they can, I think that's obviously going to be very, very bullish for the overall markets. So this weekend was pretty special for me. I got to go do the Boston meetup. I hope everyone had a good weekend. Good morning to everybody. It was very fun, as a lot of these meetups are. I'm going to take a couple minutes and just recap what happened at that meetup, and then we'll get into the show. This weekend was crazy in a couple of different ways, and we'll talk about kind of the two main things that happened. But one of the main ones was obviously the Boston meetup. Again, it's really hard for me to put in words every single time I come back from a meetup. It's just like, it's hard, dude. Like it's emotional. There's a lot of people that take time out of the day. I think we had about 50 to 60 people. This picture was taken at the very beginning of the meetup, so it doesn't encapsulate how many people were there. But I believe it was about 50 to 60. And yeah, we had a great lounge in Boston. It was the American Bistro Lounge, American Cocktail and Bistro Lounge in Boston. There was no one there for like 5 hours, from like 3 to 8 p.m. And yeah, we just got the whole place to ourselves. Like, I've been getting very lucky on these meetups. Now, granted, I called them a week before and I kind of like set everything up, but I've been just finding really good spots that are free on a Saturday during the day. And the bar doesn't care because everyone buys drinks, so they're happy. And we got the whole place to ourselves, which was pretty awesome. So shout out to Krishna there. He's there in the chat. It was nice to meet you in Boston. If anyone is there in the chat, just let me know. It was great seeing everybody, but it was really cool, dude. It was really fun. Again, the purpose of these meetups is to connect a like-minded community of people that don't have their investing community with their friends and family, which so many of you said when I was talking to everyone, which is that the reason they even showed up and took time out of the day is because they don't have anyone to talk about this stuff with. And again, the cool thing about these meetups is like everyone kind of gets into little groups and networks with each other and talks to each other. And you meet so many people from so many different walks of life and diverse backgrounds. And you're able to like really gain some meaningful connections. And some people, became very good friends. And one guy was learning about covered calls and he was like, wait a second, this is life-changing. He has a pretty big portfolio. He hasn't been running covered calls on it. So it's really cool to have these opportunities and have everyone come together. And that's why it was really fun. So it was awesome, dude. We had one guy fly from Taiwan for the meetup. And I know it sounds unbelievable when I say that. I didn't believe it, but the dude flew from Taiwan. Here's a video of my boy Tim. But he flew 20 hours. I was like, no, you're visiting the US, you're going to New York, you're gonna spend a week. He's like, no, dude, I'm leaving tomorrow. It's just like it's pretty incredible. So I'm at the Boston meetup right now. I have someone who came to the meetup. You can introduce yourself.
What's up, guys? My name is Timothy, and I flew 20 hours from Taiwan just for this event, just for this meetup. See this incredible dude right here doing incredible stuff. Really thankful for it.
20 hours from Taiwan. That means a lot, dude. It really means a lot.
What you're doing means a lot to me, and you have no idea. I believe a lot of you guys feel the same.
And he's early pouncer, baby. Sorry if the audio is a little bad on that, but basically, he was saying he flew 20 hours just to kind of get this community. I'll put the video in the chat. The video is probably easier to listen to, not through YouTube. So the video is right here in the chat. But it was pretty incredible, dude. It was pretty incredible. Like you walk in and you're just like immediately humbled by someone taking the time out of their life to do that. He's 19 years old. He brought his brother, and it was really dope. It was really dope. Chad says he went 20 hours with no interventions. Yes. Okay. So that transitions us into the next point that happened. I FSD'd to Boston. That was the plan. There wasn't any master strategy behind this. I just said, you know what, Boston's nearby. I've been there many times before. I'm not super familiar with the region, but it's not like a brand new place that I'm scared to go to. New Jersey is about 5 hours away. It's not that big of a deal. Let me test out if I can FSD. And so I did it. And there were 0 interventions. I thought there would be at least 3 to 4 interventions. There were 0. I stopped in 3 hours in between to get food and to charge. And outside of that, the lane switches, the exits, all the little fears I had of like, is the car really going to do it? I gave it a lot of trust. And like, even in the tightest of moments, I said, I'm not going to intervene. And the car ended up pulling it off. 5 hours there, 5 hours back. The only time I had to stop was when I checked my phone too much and the car got annoyed. And it was like FSD not available for the rest of this drive, which means you have to pull over, turn off the car, turn it back on. And so like that happened a couple of times because I couldn't stop checking my phone. But regardless, it was 0 interventions across the entire board, which was amazing. And so then I decided to make a video about it when I came back. I got to Boston. I made a video. I'm not going to play the video right here. It's like a 2-minute video. I'll put it in the chat if anyone wants to listen to it. And your boy Elon Musk decided to repost the video. No comment, no quote tweet, not just a retweet, but literally like sharing the video from his account, almost as if he's posting the video with no caption. So you kind of, see this random dude pop up from Elon Musk. Everyone kind of wants to listen because it's like, what does this random dude have to say? Why is the world's richest man reposting some? And again, it's not a repost, it's a sharing of the video, which on a technical term is different. There's like a retweet on Twitter, and then you can push down the video and then share the video as if you're posting the video, but it's from a different account. It's like a nerdy Twitter technical way of reposting something, but that's how Elon did it. And it got 35 million views. And it was kind of crazy. I mean, there's nothing more to say other than it was kind of crazy. But yeah, it was pretty dope. And again, I'm not some big Tesla shill. I'm not big in the Tesla community like that. I'm like, you can call me a Palantir shill or Robin Hood shill. You can't call me a Tesla shill. So it's not like I'm doing this because I get anything. I genuinely do. I had 0 interventions. I made the video and I was like, this is really cool. And I guess Elon watched the video and he thought it was cool as well. The funny thing about that video, so the story on how I found out Elon posted it was 4:50 in the morning, the day after the meetup, and I woke up and I just had to use the bathroom, and I had tons of text messages, and I'm just like, why am I getting old? And there were people texting me from high school, dude. Like that's how insane it got. And they were texting me this Elon video, and I'm like half asleep, and I click on the text message, and it links me to Elon reposting my video, and I look at it, and I'm like, okay, cool. And then I peed, I came back and I went to sleep. And then I woke up at 10 a.m. And then I was like, oh, Elon reposted the video. That's kind of like, that's a big deal. So I didn't get it in the morning until I woke up again. And then, yeah, obviously it was pretty crazy. The first 15 seconds of the video was me justifying how, as a Knicks fan, I'm choosing to wear a Boston hat to the meetup in Boston. And so you had a lot of people in the comments. There was 35 million views. There was 20,000 comments. There was a decent chunk of comments that were not happy that I wore a Boston hat, even though I'm a Knicks fan. So that I had to deal with that. And then the last 15 seconds of the video was like, hey, I think I want more Tesla, even though the earnings sucked. So it's like first Elon shares a video where the first 15 seconds is like, hey guys, I'm ready for the Boston meetup. Like 35 million people have no clue what the Boston meetup is. They're not part of this community. They don't know what's going on. And so that was kind of weird that they had to go through those first 15 seconds. And then the last 15 seconds is me kind of shitting on the earnings, saying, hey, the earnings weren't that good, but I do want more Tesla. So it was a positive endorsement, but it was also like, hey, the earnings weren't the best. And if Elon listened to the whole thing and still decided he wanted to repost it, then I mean, I guess Elon just really enjoyed the fact that I was vocal about the fact that there were 0 interventions, which there were, and that to me is, I think, the coolest part of that journey. And I guess Elon wanted the world to know that, hey, you can go from New Jersey to Boston without having to intervene. So yeah, it was pretty cool, dude. It was pretty cool. Like I don't even know what to say necessarily to like acknowledge it. Like the amount of text messages I got, and all I could say was like, I'm super grateful that Elon posted it. And that, it was content that he was willing to share with the rest of the world. But one of the things that makes Elon so cool is that he engages with regular users, right? He engages with people that can post a video about their experience with Tesla, and it doesn't have to be some corporate PR, but like he just goes direct to the people. And I think, that's why he bought Twitter. That's why I use Twitter all day, or X. And I think that's also why, anyone has a shot to be able to get exposure and distribution, which is what you need to be able to like build your brand from an Elon Musk, if you're just able to be authentic and put the content out there. So that's what we got. It was a great weekend. Super cool stuff. Very happy that I met everyone in Boston. Again, I cannot say enough words about how grateful I am that people actually came and took time out of their life. There was this one lady who brought her daughter. She was a 5th grader. And, you know, it was so amazing talking to her daughter about how she wanted to like invest and like be ahead of the game and all this stuff. And there were, yeah, again, someone flew from Taiwan. There was a guy, Alex Stein. Shout out to Alex. He's 75 years old. And he loves the channel, and he got really upset at me for not knowing certain movies that Steve clowns me on every week. But, you know, he cracks up at those parts of the market close. We are at a school teacher. I met this lovely school teacher. She bought 1,042 shares of Palantir at $6. She kind of forgot that she bought those shares. And like in 2024, like she bought them in 2022. In 2024, she was dealing with some personal stuff. She opens her Schwab account one day while she's teaching a class, and she's up like $87,000. And she's like, holy crap. I mean, the amount of people I met that were early Palantir or that retired off Palantir. There was one guy who bought some calls when the stock was 8. He bought them for 20. He made a lot of money, retired. I mean, like, it's just the fact that the company has touched these many lives also continues to amaze me every single meetup I go to. There weren't a lot of people watching those videos in 2022 on YouTube when the stock was $7, but the people that were watching, they find a way to show up to these meetups just to kind of show their gratitude and also be part of a community that started originally with Palantir. So it was incredible stuff. Very grateful to everyone who came to the meetup. Next meetup's likely in Miami in August. I got some big plans for the Miami meetup in August. June and July might not have meetups simply because my grandparents are coming from India. They're actually coming in a couple days. And so I'll be spending some time with them at home. I'm going to be traveling in June, but like not aggressively for any meetup. The next one is going to be Miami in August. I will have plans for everyone pretty soon. And yeah, that'll be a fun one. And we'll keep this going. We will keep this going. All right, cool. Let's get into the markets. Thank you, everybody, for being here. So let's start off with the biggest news of the day. First of all, let's just look at what's going on in the pre-markets. I hope everyone had a good weekend. Stocks weren't obviously getting that much buzz over the past couple of days, although we did get a lot of news in the bond markets, which is why you're seeing stocks super green in the pre-markets. Palantir right here up 3%, Robinhood up 2%, Tesla up 2.29, SoFi's up 2.6, Google's back at 170, Nvidia 134. Nvidia has earnings tomorrow. That's going to be a very big one. There is some very bullish updates on Nvidia in the pre-markets that we'll talk about. Meta's up 2% back at 640. Amazon's at 203. I mean, overall, you're seeing markets really get some momentum as we head into the final week of May. We do have a bunch of earnings with Salesforce and Nvidia this week as well. Bitcoin right here back at 109. But the reason for all of this to me is because of the bond markets. And so let's kind of talk about what's going on in the bond markets and how that's affecting the broader the broader stock market. What happened to the London June meetup? Okay, so two things happened. Number one, I still don't know if I'm going to the Robinhood event in France. The whole point of the London meetup was if I go to France, I would set up London. But number two, honestly, I didn't know my grandparents were coming from India. So it's going to be a little tough for me to travel when they're home because, you know, they're getting older. This is going to be, you know, they don't come to the US that often. And so them coming from India, I kind of do want to spend some time with them. So I do think London's going to happen. It might happen closer to the end of the year, around that October, November time. It might not be able to happen in June. And I still don't know if I'm going to France for Robinhood. So if I do, you know, we'll do something in France. But if I don't, then we're probably going to just extend that later into the year. Okay, so bond markets, what's going on? Japan is finally getting these yields to come down, folks. That is the biggest story of the morning. It's the most important thing that needed to happen in I would say in financial markets over the past 2 weeks. And the reason it's coming down, the TLDR, is that the Ministry of Finance last night, which was Japan's morning, said they were sounding out the market on bond sale amounts, which essentially means they're going to be trimming their issuance of super long bonds. Which, what does that mean? In the most simplest sense, they're going to be reducing the supply of bonds on the 7, 20, 30, or 40 year, these super long duration bonds. And as a result, there's more demand, right? Or whatever demand that currently exists just it intrinsically elevates because there's going to be less supply of those bonds. That means it's not really going to be the best for Japan in the short term because they're not going to be able to issue as much debt for the long term, although they are increasing their issuance of short-term notes instead of long-term notes, which is kind of what the market cares about, just like the long-term end of the yield curve being in a much better situation. And as a result, that has affected the US 10-year and the US 30-year. We got the 30-year back below 5%, the 10-year right here, 4.473, still not good, but this bad boy was touching 4.7 last week, so it's much better than before. And as a result, the stock market right now in the pre-markets is benefiting from that as well. The 30-year 4.983. Again, this was 5.04 last week. So we really did need to see these come down, and we're starting to get them to come down, which is a very good thing. So that's kind of the story in the pre-markets. I mean, I was asleep last night when Japan made this announcement, but this announcement is what's getting stocks to react in a much more positive way. We'll talk about Morgan Stanley and JP Morgan. They came out and they said a bunch of things that are just uber bullish on the markets. And so we'll talk about that. But bond yields being reduced is something that's very exciting currently right now. And that's, I believe that's helping the stock market as we see right now in the pre-markets. Then you had this piece of news. So this piece of news broke like 10 minutes before I went live. And this was also super bullish. This is something I've been predicting for the past 3 months, or at least since April 2nd, that it's going to happen. And it looked like it might happen. So White House economic advisor Kevin Hassett said tariffs could go to 10% or less for some countries. Lower tariffs would be good for countries with good offers. I've been saying this for the past 2 months. I think that Trump is going to have to bring down that 10% baseline for some countries like Vietnam and Thailand and Zimbabwe and South Africa, because there's just no way those countries are going to be able to pay 30, 40, 50%, or even like 15 or 20%. That would lower the overall tariff rate across the board. Right now it's at 14%. It was at 24% 2 weeks ago. And 2 months ago, before the tariffs, it was at like 3.4%. So obviously it's up aggressively from 3.4 to 14, but at least it's lower from 24. If that 14 can turn into 7, I think the markets can stomach a 30% tariff on China and a, call it, 4 to 5% tariff across the rest of the world, or even a 10% tariff across the rest of the world, with some exceptions for different countries. If we do that, inflation projections also get lowered, which means the inevitable thing that we're all waiting to happen, which is the Fed cutting rates, also has a shot to happen. Right now in June, the probability for a Fed rate cut, remember June 18th is going to be that Fed FOMC meeting, is 5.6%. For July, the probabilities are at 24%. So, we still have a ways to go to potentially get that July cut, but it's inching up there, even if that June cut likely might not be happening. So from that perspective, I think this was super bullish from what Kevin Hassett had to say and what Japan is doing, and stocks are reflecting that. I think it's important for everyone to remember, if Moody's couldn't take the market down, if a weak 20-year bond auction couldn't take the market down, if Trump saying, hey, 50% tariffs on Europe couldn't take the market down, then this is a market that's starting to become very resilient on the overhang of AI, that it's starting to become a tailwind versus a headwind in regards to the narrative that we're seeing on earnings growth. And Nvidia is going to hopefully continue to propel that forward tomorrow. It's a market where I don't know if anyone wants to be super short or super bearish. And then speaking of Europe, we did get another update last night from the president of the European Commission, who said the EU and the US share the world's most consequential and close trade relationship. Europe is ready to advance talks swiftly and decisively to reach a good deal. We would need the time until July 9th. About 20 minutes later, Trump says he will be moving the 50% EU proposed tariff to begin on July 9th versus June 1st. I mean, yeah, that's a lot of stuff happening on a long weekend that is super bullish. Japan bond yields coming down. You got Trump saying he's going to delay the 50% EU proposed tariff for another month, which basically means it's not going to be 50%. I mean, I hope everyone recognizes that. The reason they're delaying it is because they just need more time to negotiate. This 50% hopefully goes down to 10% or maybe 15, 20% max, but I think it's going to go down way lower than 50. And then you have Kevin Hassett coming out saying that, hey, we're probably going to be reducing tariff rates across the board from 10% or lower to all these different countries that we had reciprocal tariffs on. The EU's cooperating. Japan's starting to cooperate. Our U.S. credit markets are cooperating. And then you've got Kevin Hassett saying the White House is ready to cooperate, not to mention all the different AI updates that I haven't even talked about. You put all that together, you got some excitement. And that's why we're seeing the pre-markets as green as they are. Robin at 64.76, Tesla 347, Nvidia 134.67, and then Palantir right here 127.18. Speaking of Palantir, we do have a little bit of an update on Palantir. Alex Karp gave a new speech, or a kind of keynote presentation, at the Economic Club of Washington. And there is a clip that stood out to me while I was listening on my ride home from Boston. And here's the clip that, again, continues to reinforce why people enjoy investing in Palantir.
And then our claim to fame really is we absorb the risk of creating value, which is the typical way you build software. The vulgar version, I won't use, the way you're taught to build a software company is, your customer thinks they're getting laid, but they're getting effed. And we used to internally say, no, we're in the mutual pleasuring business. Both sides should be happy. And so we absorb the risk of value creation. So like, you will make more money, your enterprise will work better. And then
It's carp, baby. It's carp. It is why carp gets people to listen to him. You know, my analysis on that clip, I wrote a lot of stuff on Twitter last night, but the kind of core point, I'll link it right here in the chat, is that you need an effective communicator. You need an effective communicator when your stock is trading at this multiple, when you need to get more people interested in believing in the business. You need someone that proves a thesis around why. Like, people probably are asking, why does Palantir trade at this multiple, right? It can't just be the growth, because obviously the numbers can't quantitatively justify $300 billion in market cap. But one of the reasons is the qualitative aspects of simply understanding that they're in the business, as Karp says, of proving their value. And when he uses this kind of rhetoric of, people think they're getting laid, but they're getting F, to me, it just kind of highlights a more authentic, charismatic way of showing to the world you're not afraid to say that other software companies are not going to fulfill your needs. It is going to be a company that actually cares about you. And one of those companies ends up being, and has been, in the software AI marketplace, Palantir. So very exciting stuff for Palantir. Again, continuing to get momentum. Stocks right here at 127.31. It's kind of been barcoding around this 120, 130 range. I think that is super normal. I think that's strong. We are beginning to normalize triple digits on this stock, which I've been saying for the past couple months, or the past couple weeks, realistically, needs to happen in order for us to say, hey, this is a stock that doesn't have to go back down to 60, 70 bucks. And the more we do that, and the more Karp gets the world to believe, which is the job of a CEO, to get the world to understand your vision, then I think the better shot we have of Palantir staying at these levels. So Palantir right here, 127. SoFi a little bit up in the pre-markets, 1345. Amazon at 204. Google 171. Hoodie 64.88. And then Nvidia 134.69 currently right now. E-Money, shout out to you. This guy, I met him in the Boston meetup. He brought his lovely fiance and got to talk to him about the world. He is on YouTube and Twitter. E-Money, if you could link your Twitter right here in the chat, I'll put up your Twitter on the screen. But he also has a YouTube channel, and he's been watching for a couple of years, and that kind of inspired him to make his own channel, and he's getting into the finance game. So shout out to you, man. It was really cool seeing people bring their significant other, and just like, it's so funny whenever I see someone's fiance or girlfriend, because I ask them do you know about me? Why are you here? Like, and they're like, no, we know about you. We know about you. You're spending more time with our mans than we are. And I take a lot of pride in that. That's really cool. So shout out to you, man. Thank you for being here, and hope you enjoyed the Boston meetup. All right. So what else do we have? Is Bitcoin at 110? Are we mooning on Bitcoin? Hold on. Bitcoin, that'll be good for Robinhood today, and Coinbase. Bitcoin, there you go. 110 up 1.13%. There she goes. So let's talk a little bit about Bitcoin. Bitcoin has been having an incredible run. And the reason Bitcoin has been having an incredible run is primarily, in my opinion, because institutional investors are starting to recognize that the deficit spending we are going to do in the United States is not going to slow down anytime soon. So they need a counter-cyclical hedge against the debasement of the U.S. currency. And as a result, you're getting some momentum in Bitcoin. Michael Saylor also bought 4,000 Bitcoin last week. He now has 580,000 Bitcoin. And here's 3 things that he said in the Bitcoin conference. He's going to be doing a live keynote, but he was at some fireside chats yesterday. He said, if you're the degenerate with the 20 short-dated call options, I'm not running the business to make you successful. Don't come crying to me if we do something that makes shareholders money in 4 months rather than 4 days. And he says, I don't think Wall Street is the enemy. I think Wall Street is the battery. So you've got Mr. Michael Saylor, who's saying, you know what? Bitcoin is not slowing down. There's going to be a ton more momentum. And as a result, we should be embracing the sort of asset class, and we should be understanding more how Bitcoin should be evolving as something that everyone should be caring about. What's also really important about this is that he talked about the at the moneys, all the dilution that he's doing, and we've been reporting it for the past couple of days on the show. That's why, MicroStrategy has been down, but Bitcoin's been up. And he addressed that head on, and he said, I don't care. I mean, there's a video we'll play later, but he literally said, I don't care. He said, the reason we're doing this is to buy more Bitcoin. And if you don't like it, don't buy the stock. And as a result, you got MicroStrategy doing what they want to do, Saylor doing what they want to do, and the rest of the world, you either believe in it or don't. But if you do believe in it, then you're in this Bitcoin vision for the long term. We got some breaking news right here in the context of Bitcoin. Is this true? Let me confirm. I believe it is true. I think we got it. Yep. Here we go. All right, folks. So I saw this headline yesterday. The Financial Times reported it. I didn't know if it was going to be true. Apparently it is true. Trump media announces $2.5 billion Bitcoin treasury deal. That's actually probably why Bitcoin is now at 110.3 right now. There you go. Okay, so what is Trump media doing? So DJT, the stock, which probably should be up right now. DJT, that represents Truth Social, it's up about 3%, not really getting a major move, but it's up. They are probably raising $2.5 billion that they will either issue through stock or through, I would imagine it has to be through dilution. And they're going to start buying Bitcoin. They're going to start buying Bitcoin. So there you go. I heard he's buying hymns too. Yeah, I don't think Trump media is buying hymns, but they're buying Bitcoin, dude. All right, so here's the thing. Like, again, do I like this? Am I a fan that the most powerful person in the United States office is using his wealth to be able and influence to then create a Bitcoin treasury for his holding company? No, I'm not a fan of that. I don't like it. I don't like that he had a meme coin. I don't like that he had a meme coin dinner. I think he's using the office to benefit monetarily from that. However, I mean, it's hard to be bearish crypto when that stuff is happening, right? Like, it's really hard. Like, I'm trying to be objective here. Do I like it? No. Am I buying DJT? No. And DJT stock down right here, 2%, probably because they're diluting. So that's probably why the stock's reacting negative right now. But is it hard to be bearish crypto when the president of the United States is raising a Bitcoin treasury? Yeah, it's pretty hard. It's pretty freaking hard. Robbing it right here, $65. Where's MSTR? MSTR is at 380. MSTR, again, is down because of all that dilution. But nonetheless, if you believe in Saylor, you believe in his long-term vision. That's why MSTR is down from about 420. And then Coinbase right here, 269. That's up 2.2% currently right now. The offering is expected to close on or about May 29th. On or about May 29th. There you go. The president of the United States is buying Bitcoin. Again, I said this as soon as the meme coin came out in January. I was not a fan of it. I don't like him abusing his power like that. But I also can't do anything about it. Like, me sitting here and complaining about it does nothing. I am not the president. I don't have the ear of the president. I can't tell him what to do. So all I can do as an investor is react to it. And from an investor perspective, it's pretty damn bullish crypto. And if it's bullish crypto, I want to get exposure to it. Robbing it, again, kind of my favorite exposure to it. But there's a lot of other ways to get exposure. And if you're owning any level of crypto exposure in your portfolio, there's a chance to benefit from this as well. So Bitcoin right here, 110.5 currently right now. The reason I didn't take this seriously is because I think Trump media responded to the Financial Times yesterday, and they said, like, this isn't exactly true. And so I thought the Financial Times might have just been off on the reporting, but no, it looks like we're getting confirmation right now that he has officially announced the $2.5 billion Bitcoin treasury, and it will be closing around May 29th, so the end of this week. And I wonder if they're going to be, so they might not be doing it through dilution. They might be doing it through the 0% coupons, that Saylor, like the free money, that Saylor, DJT down 7%. I think the market's thinking they're doing it through dilution, or they might be literally diluting right now and issuing shares, which would cause the stock to fall if there's not that many buyers for those shares. But if they're doing it through a 0% coupon, that's actually not the worst for shareholders. So I guess we got to find out to see kind of how that's playing out. Grab right here. What's Grab doing? Grab's at 502. So the Grab warrants are up right now about 60%. So if you own the Grab warrants, congrats. They're up 60%. I don't think there's any major news on the Grab warrants other than, and the Grab warrants are just like a different financial instrument. They don't have to do with a stock. They're a little bit more risky because they have an expiration date. But the reason I think Grab warrants are up right now is because yesterday, Indonesia, in the Indonesian stock market, GoTo, which is the company Grab's trying to buy out, was down 5% or down 7%. Grab was actually up 5% on the Indonesian markets. Right now in the US markets, it's up 1.4%. We'll see how it opens at 9:30. But the reason I think GoTo was down is because the market's starting to recognize that, hey, Grab's going to buy them out, and they kind of, want to get out of GoTo. And so we'll see how that affects the US markets, but that's what I think is affecting the warrants. The warrants are probably up based on the Indonesian markets kind of tanking GoTo yesterday for whatever reason. My assumption is just that they think this acquisition is happening and they want to get out of it. And that could be helping Grab right now. But we'll see if we get more updates later. Shout out to Wayne. He has 15,000 warrants. Congrats. I was going to buy the warrants, but again, I bought the option, so I have an expiration date as well. The good thing about the warrants is that the expiry is December 26th, 2026, and the strike price on the expiry is $11. I'm assuming by 2027 January, Grab could be $10. So if the warrants end up getting super in the money, the options that I have should be in the money as well. And hopefully that's very good for Grab. So that's what we got on Grab. Okay, Nvidia. Let's talk about Nvidia. So what is going on with Nvidia? There's a couple updates. Nvidia earnings are tomorrow. I am very excited for it. Let me know if you are writing covered calls, if you're buying more shares. I think there's a lot of different ways to play this. I kind of don't want to have covered calls. And if I do, I want them to be super out of the money, like 170. I'll be collecting pennies, but at least it's something. because I just think there's a world in which they can do very well. There's also a world in which they stay flat. And so we'll talk about it later today. And I guess we can come to somewhat of a conclusion on what we think will happen. Also, the podcast with Roy and Tanner that I do every Monday, we didn't do yesterday. So we're going to do that tonight. We'll talk about Robinhood and we'll go into Nvidia. All three of us own Nvidia. So we'll do a little bit of a preview tonight on that podcast. Okay. So here was some breaking news yesterday. The UAE announced they will be providing every citizen a ChatGPT Plus subscription for free. This was pretty cool, dude. So this is part of their strategic initiative that OpenAI is working with on the UAE, along with Stargate and building out data centers. And to me, the takeaway here is that countries across the world, especially in the Middle East, are realizing that AI is the next modern revolution. And they are literally making sure their citizens are ready for an AI first world. Like you can't grow a population or grow a new generation of people that aren't growing up with AI because they're going to be outpaced. They're not going to have the skills to survive in an AI economy over the next decade. And so the ability for them to guarantee ChatGPT Plus for everybody, again, they don't have 350 million people and they have a lot of oil money. So that's why they're able to do it. But the reason they're able to pay all that money to OpenAI is because they want their citizens to grow up with AI. And the fact that they're doing it with an OpenAI is just proving how synonymous ChatGPT is becoming with the entire concept of AI. And as a result, that's very bullish for Nvidia because, again, Nvidia runs on compute and tokens. The more demand for tokens, the more demand for compute, the more demand for GPUs. Nvidia needs more people using these products. That's why Nvidia invested in OpenAI and XAI and all these different companies that are building LLMs, because Nvidia knows they're going to get that money back eventually as the expansion of the product grows. And so to me, that's super bullish for Nvidia. And that also indicates the overall data center wave. By the way, VRT, that stock got upgraded by JP Morgan today, I think to like 250. That's another data center play. A lot of these names, yeah, that's up 3.2%. A lot of these names are getting some momentum. And this momentum is obviously very bullish for the overall energy sector, along with the data center sector as well. Oklo, last week, big news for nuclear. That's up 3%. SMR currently right now is up 2.3%. Nano nuclear, that one is up. That one's down 2.4%. All these names benefited by the tune of about 20 to 30% last Thursday when Trump announced the executive order on nuclear energy and how we need to unlock massive amounts of energy. I mean, it's not a joke. We need energy. And although these companies don't have tons of earnings, at least Oklo, you're betting on that potential. And that potential is seeming to be manifested in the fact that AI is expanding across the entire world, which is very important. Now, one thing about OpenAI that I was talking about last night, so me and my sister went out for lunch yesterday, and I was talking to her, and I was just like, so are you using AI on a day-to-day basis? And she said yes. She's on ChatGPT all day. And so I asked if she uses Gemini, Grok, all this stuff. She's like, I have no idea what those are. And then I said, they're separate LLMs. And the thing she said after that really shocked me. And this also proved to me how early we are in AI. So I said, hey, do you use ChatGPT? She's like, yes. I said, hey, do you use Gemini or Grok? She says, no. She says, what are those? I'm like, those are LLMs. And then the next thing she says is, what's an LLM? And that to me was like, holy crap, bro. Holy crap. And I said, it's a large language model. And then she said, what does that have to do with ChatGPT? And, it was one of those things where it's not about my sister not knowing about technology or stuff. It's about the fact that my sister is like every other person that's not obsessed with like tech and finance news. They don't care. They just want the shit to work. And the fact that she said, I don't know what you're talking about when it comes to LLMs, but I know that ChatGPT is like the only thing I use now. And she said her Google usage, by the way, significantly has reduced, is showing to me how early we are. And, the enterprise landscape is still barely embracing AI. Users across the world are just getting acclimated to it. There's a long runway. I say all this to say, I think Nvidia, even with the China charge off of about $5.5 billion that they're going to lose in revenue, if they can issue a massive raise, which is what we need, like a real serious raise on guidance, even if they don't beat earnings, but they raise their guidance, that is where I think the market's going to reward the stock. And hopefully we see this go a lot higher going into the latter half of the year. I mean, I don't think it's crazy to say we see 145, 150. Now, the implied move is 8%. So realistically, it's around 143 to 124. That's kind of the range that Nvidia will be trading at. For the past couple of quarters, Nvidia has gone down about 3 or 4% on the earnings. And then over the corresponding days falls like another 5 to 7%. So the past 4 earnings have been really crappy just in terms of the stock price reaction. This time there's an 8% move implied. So maybe, we get that to the upside. But Nvidia is up 35% from the lows in the past month and a half. So I also think there's a world in which it doesn't need to go up, which is where the option seller is going to print a lot of money. But then again, if it does go up, the option sellers will be underwater on those calls. And so that's what I think is the risk is right now to be able to invest into Nvidia. So that's what we got in Nvidia. We'll have some more updates later throughout the day, but that is what I'm looking at. And I think earnings hopefully will be strong regardless of what happens to the stock. In terms of Tesla, we do have some updates on Tesla. So UBS is not buying it. They are staying pretty bearish. They reiterate their sell on Tesla. They cite declining global interest. UBS maintained their sell with a $190 price target. The UBS survey shows that the U.S. market saturation, limited models, and affordability issues in China, rising competition, and in Europe, possible brand damage linked to Elon Musk's politics. They remain cautious, noting that while there's excitement around Tesla's robotaxi and robotic ventures, challenges in the core auto business pose risks, especially with potential regulatory changes in California. Now, they're not that wrong about the brand sentiment still in Europe. Tesla sales in Europe fell 49% year over year in April. This data came out this morning, even as battery electric sales rose by 27.8%. So you had sales down 50%. Insurance registrations are at 11,000 this week in China, which is good. It's not some massive year over year increase, but it's good in China. It's not horrible. It's not amazing, but it's good. In Europe, this is kind of just bad. It's just like not good. So 49%, even though the EV industry is growing about 30% year over year. They sold about 7,500 cars in Europe in the month of April for Tesla. Now, having said that, we talked about this on Friday. For those that missed this news, this was very, very bullish for Tesla shareholders. And even if the next couple earnings are going to suck, I do think that we will get through it because of what Elon said on Friday. Elon said, in a nutshell, Doge will delay the bankruptcy of America, but won't solve the issue. He's come to the conclusion that GDP growth matters more than anything. And he says only radical productivity improvements will save America. So when I saw this on Friday, as a Tesla shareholder, I got super bullish because I was like, okay, cool. Elon's back. He doesn't care. And he's done with Doge. But as an American, I got pretty sad because essentially Elon's acknowledging that he tried. He really did. And the bureaucracy of the United States is just not possible to be able to overcome when it comes to spending. I mean, if you look at that big, beautiful bill, which, you know, there's some parts of it are really good. Some parts of it are not the best in regards to the deficit spending. I think Elon's looking at that and he's like, dude, like if Trump's going to sign off on this and Trump is the guy who is like the pro spending cut president, and there are some spending cuts to be fair, there's just like not enough to the point where we could actually make a dent in the deficit in the short term. Then Elon's kind of concluded, you know what, there's no point for me to try. There's no point for me to try. Elon, I can't pull up his post right now because X is having some bugs and it's not letting me see his replies. But yesterday night, someone had this like long post about Doge and how like Doge had good intentions, but ultimately it wasn't able to get the job done. And Elon responded underneath it, I tried. 2 words, I tried. So, you know, that to me is a significant acknowledgement that Elon is saying, hey, I am moving on to GDP growth, which if you believe in the one big, beautiful bill, we might be able to get GDP growth back up to 3%, maybe 3.5% over the next decade. Now, that's aggressive. Some people are saying 4 to 5%. I think that's, you know, unless AI really does take over aggressively, then maybe that's, you know, 4 to 5% is like, that's like Singapore numbers. That's like India numbers. Like those are emerging economies. It's really hard for an advanced economy and a mature economy to grow at those levels. But still, if we can get to 3%, we can outpace the rate of our deficit, which is sad as an American to hear that the only way for us to grow is to like not grow, is to grow faster than the deficit. But it's also reality. We're not cutting the things that we need to cut, like defense, Social Security, Medicare. And if we're not going to cut those things, which are very politically challenging to cut, then we're going to keep spending. And as a result, we're going to have to grow. We're going to have to grow. Optimus is going to have to work. FSD is going to have to, like, we're going to have to need revolutions and S-curves that can bring us to the next level. One thing I am getting optimistic on, though, and I'm doing a lot more research on this, and I'm going to come out hopefully this weekend with a little bit of a one-pager and more of my thoughts and compiled research. I am getting more optimistic about AI being massively deflationary to the point where we can overcome the rise in the 30-year and the 10-year, and, you know, the credit markets are freaking out because of inflation. What if inflation is like not even kind of a concern over the next 5 years because of how much deflation AI brings to the overall economy, to the point where you could have 30% tariffs and it doesn't matter because of how deflationary AI is. I'm reading a lot more stuff just highlighting how optimistic and abundant this could be. You know, we tend to talk about the bad stuff, but what if AI really is that step change in overall productivity, which decreases inflation? And that could be the hedge against insane money printing along with Bitcoin. And maybe that's kind of how we get ourselves out of this mess over the coming years. Shout out to Triple V. Thank you, brother, for being here again for the $99 super chat. Appreciate you, man. Matthew says VVV is Elon confirmed. It is not Elon, although I can understand how people think it's Elon, but it's not Elon. If we are doing the Miami meetup, you guys might be able to meet Triple V. So I told you guys last week, Triple V is a friend of Derek, and Derek wants to do the Miami meetup in a place that he knows, which is like, he wants to make it a really fun place. And again, it's not confirmed. It might not happen there, but we're really thinking of doing it big for the Miami meetup and, booking a nice spot and catering food and like really making it one of the best meetups that we've had all year, just in terms of the amount of energy we put into it. So Triple V might be there, and you guys might get to see him there. Watch Elon Musk show up. It's like, yeah, it was Elon Musk the whole time. It was him. But thank you, sir. Thank you for being here. Thank you for the super chat. Thank you for being part of the community. And hopefully we get to do this Miami meetup and you guys get to see him as well. Rob, thank you for the $2 super chat. Admit, does FSD make you bullish at AF on Tesla? Yes. And it's getting to the point where I want to buy more Tesla. I haven't been buying Tesla because obviously I think the valuation is aggressive compared to those earnings. But after what I experienced this weekend, dude, I don't know. It's just hard to care about valuation, dude. Like, it's hard. Like it's you don't get it until you actually sit in the car and it's doing a lane switch on a very busy highway and you are doing nothing. And you just realize, holy crap, there's an execution risk to making this get to the entire population globally. But if they figure it out, I mean, dude, they're going to figure it out. All right. Trump just tweeted. We got 2 minutes until the market opens. Trump just tweeted. Here we go. Here's Trump. We got 2 minutes. I was extremely satisfied with the 50% tariff allotment on the European Union, especially since they were slow walking, to put it mildly, our negotiations with them. Remember, I am empowered to set a deal for trade into the United States if we are unable to make a deal or treated unfairly. I have just been informed that the EU has called to quickly establish meeting dates. Wow, bullish. This is a positive event, and I hope that they will finally, like my same demand to China, open the European nations for trade with the United States of America. They will both be very happy and successful if they do. Okay, there we go. Bullish, folks. Let me tweet that out real quick. There you go. Trump saying the EU is getting ready to make a deal. Trump just now. Here we go. This is probably why the markets didn't tank on Friday when we had that 50% tweet, because everyone knew like it literally was just a negotiation tactic. And we're kind of seeing that play out. Right now. All right. So Trump just now feels very confident an EU deal is going to get done. All right, there we go. Let's see if markets even get, it's funny Trump tweets this at 9:29 a.m. Eastern. It's kind of like he knows the markets are about to open and he wants to maybe help the markets out a little bit in their final push as they open. We got 30 seconds. Here's what Trump just tweeted. There you go, European markets. Let's see. PDD, Pinduoduo, fell 20%. We'll talk about their earnings, but they missed EPS by 40%. So Pinduoduo, a lot of people have been saying it's incredibly undervalued, which it is if you look at the cash on their balance sheet compared to their earnings, but you can't miss EPS by 40%, dude. That's aggressive. So Pinduoduo, that stock is down about 20% currently right now in the pre-markets as well. All right, here we go, folks. Thank you everybody for being here. We are back to the markets. It is Tuesday, May 27th. After a long weekend, the stock market is now open. It's been too long, but we are back. Wake your ass up. Let's get into it. Nvidia opens up 134. That's up 2.4%. Robinhood, 1.83%. Robinhood is at 64.36 on the day. Robinhood is green. Tesla, 350. That's a green candle. This is after sales fell 49% in the month of April in Europe. Still, Tesla 350. This is after UBS reiterated their $190 still 350 on Tessie. So Tessie right here, 351 up 3.5%, even with some negative headlines this morning. Palantir, 127.45. That's up about 3.37%. SoFi, 13.35. Googs, 171. Look, again, even though my sister said she's not using Google anymore, Google is minimum should be trading at 20 times 2026 earnings, not 16 times. So Google, I still think is ridiculously cheap. I'm in the play. I want the stock to go up. I know they've got some headline issues around search, but regardless, the stock is cheap and hopefully the street starts recognizing that. Google right here, 171.05. That's up 1.5%. Meta, 636. That's up 1.5%. Enphase is down a little bit on the day. Microsoft, 459. Microsoft having its best month since March of 2023. It's been a while. But Microsoft having the best month since March of 2023. Grab right here is up $5. That's up 1.1%. MicroStrategy, 378. That's up 2.2%. Again, MicroStrategy not up as much as Bitcoin because of the dilution. So although Bitcoin's at 110.6 and MicroStrategy is down from 420 last week, Saylor has to sell shares to buy Bitcoin, and you just have to kind of believe in his thesis over the long term. ELF right here, 85. HIMS right here, 55. HIMS is up 1.2%. Pfizer's 23.51. Alibaba, 119. S&P 500, 585, 1.110%. We'll talk about JP Morgan and what Morgan Stanley said this morning. They are pretty damn bullish that we are getting to all-time highs on the S&P 500 relatively soon, is what they said this morning. Uber right here, 88. That's up 1%. Lyft is up 1%. CoreWeave again, my goodness, up 9%. Up 9%. Just incredible. CoreWeave, this is becoming one of those names people are using as a proxy for the AI market, but that's green. Where's Nebius? Nebius right here. That's up 1.7%. Rocket Lab's getting green. Rocket Lab is getting green. 27 on Rocket Lab. Oh boy. That is nice, dude. Rocket Lab, $27, $26.94 on RKLB. Not that bad. That's up 5.8% on the day. Nvidia right here, 133.76. Tesla, 352. Tesla's up about 4% right now. Archer, after that short report last week, kind of recovering. That's up about 4.3%. Still up 20% after earnings. XYZ, that's at 61.19. Again, HIMS right here, 55.67. That was down 10% last week. That's up 1.3 right now. Nubank below $12. Their COO stepped down. I think that's why the street got upset about Nubank, even though they had a pretty good earnings. Duolingo, 519. DoorDash, 206. Raytheon and Lockheed Martin, those are up about 1.2%. Palantir, 126.65. Tesla, 352. Robinhood, 64.44. SoFi, 1335, Amazon 204, and then Meta 635 as well. Robinhood 64.42 on the day. GameStop's going crazy. Why is GameStop going crazy? GameStop 34.75. I don't know why GameStop's going crazy. They didn't buy Bitcoin, from my understanding, but something's got to be happening. I don't know if Roaring Kitty is back, but GameStop is green. What else do we see? Tesla's moving. That is correct. 352. Yeah, I don't know about CoreWeave, dude. I don't get it. 115, dude. Are people buying CoreWeave as a proxy for Nvidia tomorrow? And they just think CoreWeave's cheaper, which it's not. If you look at their growth estimates, CoreWeave's not cheaper than Nvidia. And CoreWeave has a lot of depreciation. They have a lot more CapEx they have to deal with in comparison to their revenue growth. Like, there are some legitimate, not bear cases, but just like things that wouldn't get the stock to elevate so aggressively. Like it would, you would think it would keep it at bay, but I don't know. Maybe there's kind of a retail army getting formed around CoreWeave right here. And there you go. Yes, Salesforce is buying Informatica. Salesforce is spending $8 billion to buy them. The deal's going to close in 2027. Salesforce said the earnings should be accretive. The acquisition should be accretive to their earnings by the second half of 2026. But they are going to be buying Informatica at $25 a share. So that was headline. I think that was last Friday, but like it was confirmed today. So that is happening right here. Oklo, what's going on with Oklo? 47. Oklo is down 3.4%. Okay, it was up 30% last week. People are selling and taking some profits right here. That's normal. Again, Oklo doesn't really have revenue yet, so you got to kind of look to the future. But if you bought it at 25 before the Trump nuclear announcement, that was your trade. And if you took that trade, then that trade has done well. IONQ is dumping. Are the quantum names getting hit? IONQ down 2%. Rigetti, are we down 2%? We're up 4% on Rigetti. D-Wave is down 2%. Okay, so some of the quantum names are a little bit of a hit. Again, these guys were up almost 40% last week, all of them. Some of them in a day. So, you talk about cults. Quantum is definitely becoming a real cult, and any 3-4% declines is inconsequential given how much they're up for the month. Tesla right here, 351. So again, going back to what I was saying about buying Tesla, like I know it's expensive. And this is the thing about Tesla that I feel like if you weren't early in the stock, which I wasn't, everyone has to deal with. It's kind of like Palantir to an extent, right? If you weren't early in Palantir, if Palantir falls to 90, it would still be expensive on a conventional metric. So it's not like you're getting a bargain necessarily. It's just, the stock might go up, stock might go down, and you have to pick your entry. I think same thing with Tesla. At 220, Tesla was expensive if you look at the conventional metrics compared to their earnings. But like, not only does the street not care, the technologists of the future that are betting big on Tesla, they don't care. And based on what I experienced, it's really hard to not say, hey, I want to buy a little Tesla every month, just because if that product does go mainstream, it's a big deal. Like it is the iPhone of FSD. That's what it feels like. And again, look, I love Waymo, but Waymo couldn't take you from Boston to New Jersey. There's not enough LiDAR in the world for that to happen yet. And so Tesla's solving the problem the hard way with AI and neural nets and really trying to figure out the issue. And, Waymo, it will do well over the long term as well. But if Tesla ends up really building that premier iPhone-like robotaxi experience, who knows? Who knows how big it really could become? And that's why I think the stock is benefiting right here. 350, that's up 3.2%. Nvidia, 133.57. And then Palantir right here, 125. Currently right now. Thomas, thanks for the $2 super chat. Should I buy more Nvidia before or after earnings? If you do, it's a gamble because this thing has happened the wrong way. Wrong meaning the bearish way every time. I mean, everyone that got super bullish over Nvidia after they absolutely smashed earnings for the past 4 quarters, the stock has fell. And if it was up like 1%, and it wasn't anything where buying calls or buying stock really made a difference. So I'm not buying Nvidia before earnings. I also don't want to sell calls before earnings. I still think Nvidia is cheap up for the long term at 133, just given it's still cheaper than Costco and Netflix and Walmart. But if you're buying it on an earnings pump, you just might not get it. Given Nvidia has not pumped over the past 4 quarters. After earnings, it always tanks. Yeah, dude. Like that's kind of what I'm expecting. Like it's already up 35% in a month. Like I don't think it needs to go to 150. But if Jensen says, hey, you guys don't get it. Like we are not messing around here. We are Nvidia, Nv freaking Nvidia. Like if he says something like that and he slaps some numbers on the table that raises guidance aggressively and easily gets to that 450 of EPS, maybe the street doesn't fade it, And as a result, that could get Nvidia pumping. Palantir right here, 125.48. Pinterest right here at 31. Cisco at 63. CoreWeave still pumping, up 11%, down a little bit from 115, but still up about 11.2% on the day. GameStop up 7%. I don't see the news on that. I'm looking right here on my second screen. If there's any news, I don't see it on GameStop, but it looks like they're going to announce something, which is getting people excited. Rocket Lab right here as well. Still holding 26.84. That's a 5 point. Why is Rocket Lab up? Are they announcing another launch or something? It usually doesn't move 5% in a day. I feel like there's a headline I missed over the weekend, but that could be helping. And then Bitcoin right here still holding 110. Bitcoin still holding 110. Why is HIMS tanking? Okay, is HIMS actually tanking? Where's HIMS? HIMS is down 0.24%. I wouldn't say that's tanking, but I don't think there's any headlines on HIMS. I think people are going to take profits on HIMS. A little scared to be buying in this $50 range, even though I know it's cheap, but the run has been aggressive, and I think people might take some profits here. But I don't think there's any fundamental reason on this. The only news was the Cigna news last week, and HIMS, didn't recover fully from that, but it recovered about 50% of what it lost from that Cigna headline. So if there's any volatility here, it might just be people taking the profits, which is very reasonable. I think across the entire market, although I think we can go higher, I think it's also very reasonable for people to take profits and let these positions kind of consolidate for a bit. Tassie, 353, 4.2%. It looks like she wants to be the mover today. NVTS, Navitas, that was up 170% last week. It's up 13% today. So that one getting some love. Let me check resistance on Tesla for 355. CoreWeave at 116, of course. So CoreWeave not stopping either. Okay, so Tesla 354 is about 30 cents away, now 20 cents away, now 2 cents away. Holy crap. Is it about a breakthrough? 354 resistance is 20,000 shares. It didn't break through yet. It got to 353.98. Let's see if it can get there. Mit's video pump Tesla. 354. There you go. 354. Busted right through that on 354. Where's 355? 355 resistance is 70,000 shares. 70,000 shares for 355. I don't think my video pumped Tesla, but it was kind of wild, bro. Like 30 million people seeing that. And, someone made a good point. I didn't think of it. He's like, you kind of, if you care about Elon's post, you kind of had to click on the video because there was no caption. So it's like, and again, Elon didn't retweet it. He reposted it, which is a technical term that basically algorithmically can push the video in your feed better than a repost or a retweet of a tweet. It's like a nerdy Twitter thing, but like that's how he reposts the video. And so that video just popped up in people's feeds of some random Indian guy wearing a Boston hat, Boston Celtics hat, talking about some Boston meetup. And like, there was no caption. So you kind of had to listen. Like, what is Elon posted? Like, why is the world's richest man posting this? And so it kind of forced people to listen to it. And although a lot of people were really angry about me wearing a Boston hat, the majority of people were happy because 0 interventions. So I definitely think it got people to realize how incredible this product is. And again, that's why I went to Boston with FSD. Like this is what I didn't want to take an Amtrak or a train. I really wanted to test out the car. I wanted to say, hey, can this thing actually do what all the Tesla bulls are saying it's going to do to change the world? And it did, bro. And it did it flawlessly. Like when I say flawlessly, I'm not kidding. It did it flawlessly. And the only annoying part was when it got mad at me when I checked my phone here. Like if I even go to switch the song, it would be like, pay attention to the road. But outside of that, and this is, it's only going to get better, which is the whole thing about AI that gets me just so excited to be an investor, right? It's only going to get better, which means all of the catalysts that we're thinking about across the entire AI trade, whether it's Palantir's enterprise software or Nvidia's chip architecture or Tesla's full self-driving, is just going to get better and better and better. Which is why it's also very exciting. CoreWeave, where are we at on CoreWeave? My goodness, dude, 13%. This is probably already in the highest options traded today. I'm going to check the option volumes. I feel like this is the most active options contract today. I'll check on that in a bit, but it feels like it is already. Feels like it is. CoreWeave up 12% within about 15 minutes of the market opening. Can you use your phone with FSD? No, you can't, unfortunately. I mean, you can, but like you got to like wear sunglasses and do all this. And like I get it. Tesla wants you to be safe and they want you to keep your eyes on the road and all that stuff. It's not unsupervised yet. But when it becomes unsupervised, it's going to be incredible. CoreWeave 116.55. Let me check resistance for 117 on CoreWeave and see if there's any massive walls or if this thing has an easy runway. I think, yeah, it broke through its 52-week highs. It's literally sitting at 52-week highs right now. 117 on CoreWeave, 11,000 shares. Yeah, this thing's ready to pump. This thing is ready to pump. This thing is ready to pump. You got Uber right here at 88, Walmart at 97, Tesla right here at 351, got rejected at 355. We're seeing some more momentum. Did you drive on hurry mode for a little bit of the trip? I did hurry mode for the other parts of the trips. I didn't do hurry mode. Amit, is that hedge fund loser still coming at you? Yeah, I posted Alex Karp talking about how software is important and clients think that they're getting laid. In reality, they're getting effed by traditional software providers. And then the dude quote tweeted my tweet yesterday, and he said, people are buying Palantir at 1,000 times sales because of weird sex jokes. And then I responded respectfully, dude, like that's one way to interpret it, but that's a really reductionist approach. And it's the same type of approach that the hedge funds used when the stock was at $6, because Karp had the same personality when the stock was $6 that he does at 120. And I think if you use he made like a crude joke as your logic for why we're buying the stock, that totally misses the point about communication, about authenticity, about the point of his argument, which is that software needs to provide value, not just be this like steak dinner PowerPoint that we offer to people. And then he responded to me, it'll fall 50%. And I was like, I don't think, no, he responded to me, oh, you're just an idiot. And I was like, but I was like, look, I do think the stock could fall aggressively because it's like, it's expensive right here. But like, I don't think that means like I'm an idiot. And then he said, actually, it's going to fall 99%. And I was like, what? You think it's going to fall 99%? And he's like, oh, you're stupid. I'm blocking you. I can't make this up, bro. I'll show you guys the thread in a bit. Like, I can't make this up. And I just put laughing emojis. I was like, wait a second. You think you, the hedge fund manager, are telling me I'm going to get to buy Palantir at $1.25? That's what you're telling me I'll be able to do? And then he said, oh, I don't like you. You're a loser. I'm blocking you. And I'm just like, and he has anti-fascist in his bio. I'm like, how is the anti-fascist stopping someone from speaking? Like that kind of goes the opposite of, the whole idea of like allowing people to have communicative discourse. I'm like, oh, this guy is just like out of his mind. This guy's legit out of his mind. Like he's kind of insane right here. I'm blocking you and Palantir is going to fall 99. And like, it sounds like someone who was either short Palantir with his hedge fund or freaking missed the run. And you can call it a meme stock all you want, whatever. We've heard every criticism, but to say it's going to fall to $1, like you lose all credibility. And it's not like he was joking or being hyperbolic. Like he was like dead ass serious. I was like, all right, buddy, I guess you can keep running the hedge fund. And I hope if it's falling 99%, you should be short, but he's not going to short it because no one wants to short it. They're too afraid. They're too afraid of doing that stuff. CoreWeave is still at 117, dude. My goodness, or 116. Never mind, 114. So it got rejected at 116. No, it did hit one. Wow, it hit 117.50. It hit 117.50 2 seconds ago. Got rejected now at 115. Unbelievable, dude. This freaking stock. Is anyone buying this thing? I sold mine at 105, my one share. Hims right here at 54.97. That goes green. What else do we have? And then Tesla is still getting hit at 350, 355, at 352 right now. So that's what we got. That's what we got. Okay, here's the exchange. Let me show you. Again, he blocked me. So just like, dude, how thin of a skin do you have to have as a hedge fund manager to block someone who's like not even being that aggressive with you? It's just like, I literally said I respectfully disagree. So let's see if Twitter's having some bugs. I don't know if it'll show the responses. Yeah, here it is. Okay, so I was just like, hey, I think you're reducing like the point that about why retail bought Palantir. And then he said, meme stocks are meme stocks. You can be a complete idiot and make money if you're early. No one's disputing this. And I was like, okay, so if the idiots bought it at 6 and now it's at 120 and that's a 20x. If it falls 50% and it goes to 60, the idiots would be up 10x. I was like, so I would love to be an idiot then if I'm only up 10x. And he says, it will not fall 50%. It will fall 99% and you'll have led many people into it. And I was like, okay, bro. I mean, all right. I guess I led many people into something that's going to go to $1.25 a share. Like, and if you're that certain, I feel like you should be shorting it, but you know, he's not going to put his money where his mouth is. And then he blocked me. I was just like, all right, man. This whole experience has been really, the only reason I'm talking about it is because I haven't interacted with like these professional hedge fund guys, and maybe this guy's an anomaly, but I mean, dude, like the skin is pretty thin and their disdain for retail, at least this guy's is quite incredible to see. But yeah, that's what he said about Palantir over the weekend. Robinhood back to 65. So there we go. 65.20 we hit on the day. Right now it's 64.92. Google's at 170. Amazon's at 203. Tessie's at 352. Again, getting rejected at that 354, 355 level. And then you got Bitcoin still holding up at 110. At 110. Blocks up 5%. There you go. Blocks up 5% as well. Block getting some momentum. Okay, can we talk about Morgan Stanley and JP Morgan? Because they said some super bullish things this morning, and they are ready to get the market to go higher. So one thing I want to show you guys, well, I'll find this clip in a second, but Mike Wilson did a podcast, and I listened to the whole thing. Mike Wilson is the chief equity strategist at Morgan Stanley. He was a little bit more bearish, kind of missed the rally. He's turned much more bullish, and he thinks 6,500 on the S&P 500 is inevitable. And I'll summarize what he said in a bit, but based on listening to him, I think he's got a hell of a point for why we should be able to see 6,500 rather soon. And again, this is after all the tariff volatility. He was a little bit more bearish during the tariff volatility, and after we got some trade deals, some negotiations, and some of this momentum in terms of the bond market, he started to recognize that it is going to be pretty stupid to be bearish on this market going forward. And I think that's what a lot of the market is realizing as well. So here's what JP Morgan said. This is their tactical view of the current bull market. The S&P 500 fell 2.6% last week, trimming the month-to-date gain of 4.2% and pushing the year-to-date return back into the negative territory. And then they said headwinds in the U.S. were created by bond volatility surrounding the U.S. fiscal situation in an otherwise quiet macro data week. While the 10-year yield only rose 3.4 basis points in the week, it traded in a 20 basis point range, and the MOVE index increased 4.4%. With the S&P 500 less than 6% from all-time highs, is the next 300 points up or down? We think higher. We had flagged pullback risk, and we believe that we experienced that last week, which we did because of Moody's and the 20-year bond auction. The key part of the tactical bullish hypothesis remains stable macro data, positive earnings, and a further de-escalation of the trade war. All of those, I think, are relatively simple to understand. Trump even tweeted more de-escalation of the trade war this morning based on what he said about the EU. Nvidia earnings loom large as a catalyst, with US-EU escalated and de-escalated over the course of the weekend. So you got JP Morgan saying, hey, we got all these tactical things. We don't really see some credit crisis happening right now. And it's hard to imagine that you're going to see this aggressive crisis that's going to create all these problems in regards to bond yields and how they kind of interact. And then you had Mike Wilson say this over the weekend that I also thought was very interesting about the amount of demand that's still coming into the stock market.
Here's a stat you may know because you still talk to a lot of people in the business, but like our work suggests that right now, retail is buying $5 billion a day, steady state. Okay. Systematic strategies, CTAs, are buying about $5 to $6 billion a day for the next 30 days, because unless the market really falls out of bed, they're trend following. And corporates are buying about $5 billion a day. So you have $15 billion a day of demand in like S&P type products, NASDAQ 100, whatever, the big stuff.
This is why I think we are continuing to see the dip get bought up. I mean, you got $5 billion from retail, $5 billion from CTAs, $5 billion from corporates. When you've got $15 billion of fresh capital coming in a day, whether it's from 401ks or whether it's just retail investors buying more stocks, whatever it may be, that's what Morgan Stanley's data is showing them, that they think there's $15 billion of demand coming in every single day into the markets. you get an Nvidia that falls 3 or 4%, that gets eaten up. You get a Tesla that falls 4%, that gets eaten up. You get a Palantir that, even though obviously it's expensive at 125, if it falls to 120, 118, it's going to get eaten up. You get a Netflix that somehow is holding at 1,200 all-time high. Shout out to Netflix, up almost 2% of the day. Why? Because I'm investing in Netflix. How am I investing in Netflix, you may ask? It's not because I was hiding from the fact, because I tell you guys everything about my investments. It's because I put $1,000 into Robinhood Strategies, and I checked it the other day, and they took some of that $1,000 and they invested it into freaking Netflix. And now that $1,000 is worth $1,028. And this is my point. About $15 billion is coming into all of these funds every day. A lot of that money is being automatically invested. As you can see right here, my growth fund inside of my Robinhood Strategies managed portfolio, I've got 2% of it in Netflix. I've got DoorDash. I've got some Palantir. I've got some Meta. I've got Costco, Visa, all this stuff. Like, I'm doing it with $1,000. You've got obviously much bigger institutions that are doing it with hundreds of millions of dollars, if not billions of dollars, every single day. And they're buying Netflix at $1,200 because they have to allocate that capital somewhere. It has to go. It has to be deployed in the markets. This is why the markets are such a beautiful thing. Like, it kind of has to go higher as long as there's money that's willing to support it, barring that the macro is actually stable. And so, I mean, I don't know, dude, what's the bear case? And I'm not saying that as if there's no bear case, but what exactly is the sort of cataclysmic, oh my God, I got to get the hell out of the markets. I need to sell everything and just like wait until everything crashes. Like, what is that case? Because I don't see it. Maybe I'm being too naive, but like, genuinely, I'm curious. What exactly is that case? Robinhood right here, 65.25. Robinhood up 3.2% right now as well. Another pandemic, sure. So there could be a black swan event, but I'm not really counting that as a bear case because no one can be prepared for that, right? I'm talking about something that's a little bit more obvious that Chris was on the show last week. He talked about private equity and the kind of the bubble in private equity, and that is a risk. That's definitely not something good, but it's something we got to keep an eye on. Apollo, Blackstone, all these companies down about 20% year to date. So they're going to have to deal with that, and hopefully that we get rates to come down soon enough so they can liquidate some of those PE investments without having to inflate or dump those investments in the public markets. But bond yields are starting to come down. That if Trump's bringing tariffs down, inflation's going to come down. Inflation projections are going to come down. Rates hopefully will come down. I don't know. It doesn't feel like there's a super, 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 super aggressive bear case right now. Yeah, trade escalations for sure. But like, we just went through hell in April with all the trade war escalations. Now we're starting to get positive tweets with the EU, India, Japan, South Korea. So it's like, that to me is a risk, but it's just not as probable as a risk as what it was back in April. Big Bear AI is also up 10% of the day. Big Bear AI is also green. Oh, Putin going crazy. Okay, so Trump did tweet over the weekend that he's really upset at Putin. Putin's not coming to the negotiating table. Putin is continuously striking different jets in Ukraine when like a ceasefire is supposed to be happening like now. So that is definitely something that I think the markets have to be concerned about. Just how intense does that geopolitical escalation become? I think Trump has faith that Putin and Zelensky will come to the table, but right now, Putin's kind of not following through on what they talked about a month ago, and that's definitely a risk. I don't know if it's the biggest risk on the market right now, but yes, Russia, Ukraine is something we have to monitor as well. But if we get to deal with China and the EU soon, man, I don't see how the markets are not going to like this. I really don't know why we think the markets wouldn't like it. We got to talk about TLT, guys. I think I'm going to get more seriously excited to go long TLT. I've been thinking about TLT a lot for the past couple of weeks. I had a phone call with Chris last night, and we talked a lot about TLT as well, along with Steve and Matt. We were all kind of talking about where we think treasuries are going to go. It is becoming really obvious that rates are peaking. Robinhood 66. Holy crap, I didn't even see that. Well, there you go. Robinhood 66. All right, not bad. 66 on the hoodie. Dude, I've been buying so much between 61 and 65. Like, it's been stupid. It's been like every other day, like 50 to 100 shares. So I've like, I've been giving Robinhood a bid, and hopefully we can break through 70. But TLT. Okay. So there's two things we need to talk about when it comes to TLT. Again, TLT is a financial instrument that essentially the way to understand it is if rates come down, TLT goes up. That's kind of the TLDR of how you need to understand it. Why are rates going to come down 70 to 100 basis points over the next year and a half, which could get TLT basically up to that $100 range? So it'll move up from 84 to 100 around that range, give or take $5-10 if we're able to get rates to come down by 100 basis points. Very simple. We are about to get two major pieces of legislation that are going to get people to buy bonds inside the United States. Two major pieces of legislation. I'm not even talking about rate cuts. Rate cuts would be just the cherry on top. Over the next 6 months, there's two things that are happening that are making me feel TLT is a no-brainer. And again, I already have some TLT. I have some $100 calls for January 2026. I kind of want to, maybe that's a little bit too early. I want to get to January 2027. But even if you just want to buy the stock, right? Even if you just want to buy a hedge against a weaker economy or a slowing down economy, or just the inevitability of the Fed recognizing that they have to cut rates, I think the stock itself of TLT is starting to position a bottom. Again, it's at like a 5-year bottom right now at 85. It was at 84 on Friday. Two things. Number one, the supplementary leverage ratios. This is essentially how much banks can have in terms of treasuries on their balance sheets. Bessent all but confirmed on Friday's Bloomberg interview that those ratios are going to be raised, which means Bank of America, JP Morgan, Wells Fargo, these banks that are dying to buy more treasuries because they want to capture that 4% yield, they're going to start buying a lot of those bonds, and that's going to get rates to come down. That's number one. That's really important. That's what they did back in 2020. And that even without rate cuts, that could get yields to come down, which would be good for TLT. Robinhood, wow, 66.40. Maybe we're going for 67 today on Hood. Number two, stable coin legislations. We passed stable coin legislation last week with the Genius Act. Guess what? All those stable coins are going to be backed up by U.S. treasuries. So any company like a BlackRock that wants to get into the stablecoin world, they're going to have a ton of treasuries because it's got to be pegged 1-to-1 with the dollar in order to be able to deploy or even offer stablecoin products to their clients. So you have two easy things that should be able to get bond yields to start to not feel the pressure anymore. And then the Fed just has to cut rates. I mean, those two things happen. It kind of feels like you don't have to play this via TLT, but my point is anything that is rate sensitive, if we are going to get those massive pieces of legislation plus rate cuts coming over the next 6 to 12 months, I think there's a way to benefit off that. And I know everyone's saying, like, what's the next big stock? What stock do I buy? Like, I don't have an idea for that. I mean, I'm DCing into Nvidia, Hood, Tesla, Palantir. Those are some names. Google, obviously, I think is incredibly cheap. It just has that headline name. But in terms of like something that could legit move on yields, it feels like it's TLT. And the question is just going to become, do yields, get that much higher than what we have right now? VG, that one's moving today as well. So VG is green. There you go, $12. That's up 5.84%. This was at $7 a couple weeks ago. So shout out to Matt and Chris. This is a name they've been over when it comes to natural gas. Venture Global right here, 1212. ASTS, this is another name that's getting some momentum. That's up at 4.2%. I did not realize how big of a cult the ASTS community is on Twitter, but it's pretty aggressive. Like, I would say it's bigger than the Rocket Lab cult, to be honest. I would say it's bigger than the Rocket Lab cult. Tesla right here, 353.70. That's up 4%. And then Hoodie, let me check resistance at 67. We were there last week for a little bit. 67 resistance is 8,000 shares. Dude, we should be headed to 60. We should be, if the volume remains as it is, we should be headed to 67 pretty easily. There's no resistance there. Dude, a lot of you guys are going crazy in the chat already for me mentioning ASTS. I don't talk about it a lot, but I've been doing a little bit of research on it, and my goodness, the cult on this stock. First of all, the stock was at $4 last year, so I can understand why people are excited about it. But it doesn't feel like a meme stock. It doesn't feel like a meme stock. There's a retail army behind it, but it feels like a legit company. And I don't know. I think there's some potential here. We'll have Chris on the show. I know he's been talking about it here and there, so we'll have Chris try to give us some of the thesis later. But yeah, I mean, like, compared to Rocket Lab, dude, when you just look on X, like, and you look for the ticker, like the amount of posts under ASTS, it was staggering. The Rocket Lab's up 10% though. Holy crap. We can look at Rocket Lab for the past 10 minutes. There you go, Rocket Lab. I have 1,900 shares on Rocket Lab. I was able to take advantage of that dip during that 21-22 range, which wasn't really a dip. It was kind of recovering from 15, so I didn't really take advantage of the 15 dip. My average is 22.25 on Rocket Lab, 22.25. So Rocket Lab right here, almost 2,000 shares on this one, 28.22. That's up 11%. I don't know why it's up, but the ASTS cult still, I think, is more aggressive than the Rocket Lab cult. But both of these names getting some love. Where's the S&P 500? SPY is up 1 point. Oh, there you go. The S&P is up 1.3%, folks. That's going to give us a green day. That absolutely 1.3. If we get to 2% on the S&P, that will give us a green day. Did we have consumer confidence just now? Hold on. Did we have that? Consumer confidence. Did we have that? Yeah, we did. Oh, crap. That's a beat. That is a beat, dude. 98 versus 87 on consumer confidence. Whoa. Yeah, that's a bit of a beat, folks. That's I mean, that's a little bit better than the Michigan survey. That's not too damn bad, dude. Holy crap. 98 versus 87 on consumer confidence. Yeah, the market loves that. There you go. That's probably explaining this like surge we're seeing right now. S&P 500 586. Where are the Qs? Qs 517. That's a 1.69% as well. SMCI moving. SMCI is up 5%. 5.4% on SMCI. Again, they signed a $20 billion memorandum of understanding with the Saudis around liquefied cooling technology for GPUs that pumped the stock from like 34 last week or 2 weeks ago. Kind of sold off a bit, but chilling out at that $40 range. And, you know, most people think this is a $60 stock just given their growth. Their margins aren't the best, but if Nvidia crushes it, hopefully SMCI continues to get that bid as well. Redwire is up 13%. Okay, so Redwire is also like a space company. Why are the space names pumping? What is the headline? Tesla 355 back at 5%, trying to go for 356. She got to 355.74. Why are ASTS, Rocket Lab, and Redwire pumping? What is the reason for that? It's all the space names right now that are getting a bid. HIMS right here, 55.20, Alpha at 85, PayPal 71, SoFi 13.28. And then Hoodie still trying to get back up to see. And Lunar, dude, holy crap. So what's the news? Does anyone have that? Like what? And Lunar's up 14%. Did Trump announce he's going to make a $18 billion investment in the Space Force or something? It can't just be the Golden Dome. That was last week's news. Unless there was new news this morning, but I don't see anything. UNH, is UNH now? We haven't looked at UNH. UNH, yeah, it's flat. UNH still has some headlines it has to deal with. Still has some headlines it has to deal with. Dude, but Rocket Lab, that's a big move, dude. Rocket Lab doesn't move 10% in a day. That's not, I know Rocket Lab's volatile, but we don't see that type of a move that easily on a Rocket Lab. That's incredible. And then ASTS up about 5.2% currently right now. SpaceX launched today. Yeah, but why is that enough to pump these other stocks? That's not, I feel like that's not a reason. Short covering. Yeah, but why today? There's got to be a reason, right? I mean, the short's probably accelerating some of this move that we're seeing on something like Rocket Lab or ASTS, but that initial jump up, I guess, is Starship launches today. But is that enough to like pump all the space stocks just because Starship is launching? It doesn't really have an impact on Rocket Lab, right? At least I don't think it does. CoreWeave 117, that one not slowing down. Hoodie still just below 67, and then Tessie did not touch 356. What we were trying to see if it can get there. Let's get a little bit of coverage on consumer confidence, but this one was a big print right now.
Let's get some conference 8.0. That is the best number since February of this year. But I want to point out something. In the rearview mirror, last month's revision from 86 to 85.7 means that last month's headline confidence equals April of 2020, COVID affected, but you have to go back another 6 years to May of 2014 to find a lower number than 85.7. So a nice rebound over what was most likely a market exaggerated reading last month. On the present situation, 135.9.
98 versus 85, bro. Or 86. 98 versus 86. That's what the street wanted. Oh my goodness, Tessie. She is. Did she touch 357? Not only did we get 356, we got 357. It got rejected right at 357. Now it's back to 356.15. Holy guacamole. Tesla, I think she wants to go back to 360. It looks like, and she was there. I mean, that's when I started buying Tesla at 360 back in January. But 356, that's up 5%. My goodness, dude. So again, the Tesla headlines, UBS said sell it. China sales or China insurance registrations were good, but not really like breathtaking. It wasn't like some big number. And then European sales are down 49% in the month of April. So you had three like quasi headlines for Tesla, two of them being rather bad. And still, stock doesn't care. Up 5%. Up 5% here on Tessie. What do you think about Broadcom? I like Broadcom. I obviously like Nvidia a little bit more. I think I just understand Nvidia's business better than Broadcom, but Broadcom obviously a pivotal player in the AI revolution. The run on this though was like back in September of 2024. That's when it really ran. And so I don't know if it's cheap right now, like an Nvidia type of cheap, just in terms of its PEG ratio and its forward earnings. But I mean, this thing was like $120, and now it's at $234. So it really had a big move towards the latter half of 2024, and now it should be moving with Nvidia as long as Nvidia does well. But I don't own this one in particular. I just kind of have more Nvidia. Nvidia right here, 134.89. Did we touch 135 today? We didn't. So let me check resistance at 135, and then we'll look at the other semis and see what's going on there. 135 resistance on Nvidia. If Tessie hits 360, I think Nvidia gets to 135. 36,000? No. 390,000 shares. 390,000 shares waiting for Nvidia. The semis, AMD is up 4%, Micron's up 3%, Lam Research up 2%, Broadcom up 3%, Dell up 2%, TSM up 2%. TSM had some great April numbers and some amazing guidance on their recent earnings. Intel right here up 1.4%, Marvell's up 4.6%, and then ARM's up 3.7%. So all the semis getting a bit of a bid today, which is not too bad for them. Bitcoin is still at 110, and then MicroStrategy is at 371, basically flat on the day. Amit, why aren't you pumping Navitas? Well, I didn't need to pump it, to be honest. I mean, this thing pumped on its own after they partnered with Nvidia, 170%. Again, some of these even small cap semiconductor plays, if you're working with Nvidia, I mean, this thing is still under $1 billion market cap. I wouldn't chase it. It's up basically 200% in the past week. But if you were in this thing, you know, at $2, $3 over the past couple of weeks, you got to see some benefit. Definitely got to see some benefit. Okay, so FICO has been confusing me for the past week. I think the credit Moody's downgrade is kind of what triggered the FICO downfall. I don't know enough about this company to understand why exactly they got hit. I'm still trying to do a little bit more research on it, but it obviously has to do with credit ratings. And it also has to do with their business model being correlated to that to an extent, even though their business model, from what I was reading from some of the FICO bulls over the weekend, is like insulated against the credit rating agencies doing what they're saying about the United States. This stock is now down almost like 15% in the past week. You don't get a type of dip like this on Fair Isaac Corporation. Like, you don't see that happen. So let me know if anyone's buying it. I don't know enough about it to say it's a buy the dip, but it definitely is weird. Like literally the critique is that their business model is too good, and that's why they deserve to fall against the credit rating agencies, which that was one of the downgrades I read from, I think it was from Goldman Sachs, and that makes no sense. So yeah, I'm still doing a little bit more research on them, but they are down 7% of the day. Tesla 355, Nvidia 134.91, and then Hood 65.94. Currently right now. Wow, CoreWeave 118, baby. Why not? Why not? Up 15%. I mean, you know, AI data centers, like, I don't know if this is a retail thing, bro, or like something's getting the market real excited about CoreWeave. I don't fully get it. Amit, you have your Google shares? Yes, I have Google shares and I have Google calls. And as like critical as I've been around their search growth narrative, because I feel like we have to, you know, critique that as like the main narrative for why it's down. I want this stock to go up. I am invested in it. Like, I want to make money, but I'm also acknowledging that 13.8% is the only number that matters in July when they report. That is the search year-over-year Q2 2024 growth number that they need to beat to show a year-over-year increase in search. I don't think they're going to beat that number. I think they're going to come in lower for what will amount to 18 months of declining year-over-year search revenue growth. However, I don't know if missing on that number means the stock has to go back to 150. So I still think it's cheap, but I think the street really does care about what's going on with search. By the way, one critique I will give is I've been using Gemini over the weekend. It sucks, bro. I'm sorry, it sucks. It's not good. It's not good. Gemini is not good. Like, I will, like Gemini as an API, when people are using it in different, like, that could be good. But as my day-to-day, like asking it questions, not good. It's just not good. I can't imagine using it over ChatGPT or Grok. So whatever 400 million users they have, I think those 400 million have not discovered ChatGPT or Grok, because if you did, you wouldn't be using Gemini. It's just like, maybe I need to give it more than a week or more than a weekend to play with it. But I didn't like it. And so it's going to be hard for me to switch, dude. Like, it's going to be really hard for me to switch to Gemini. I'm still going to give it a shot. But they've got to make search, they've got to make search and the AI overviews and the AI mode super native to people to be able to keep their cash cow. And again, their cash cow will grow. It's just their rate of growth is going to decline, which it has been for the past 5 quarters. And that's what I think the street is upset about. By the way, Nvidia did hit 135. We hit it for a second. We hit it for literally a second. Yes, I was using 2.5. Dude, even it was slow. It was slow too. Like, I asked it a question about options, and it's like it took like 10 seconds, and I was like, dude, Grok and ChatGPT are like within 3 seconds. It starts typing. So even that was annoying to me. And then the quality of the response when I compared it, I was like, this is just like, I don't know. I didn't feel it. I really didn't feel it. So some people might, have different opinions of it, and I got to give it some more time to work with it. But that whole personalization thing, I need to test, right? I need to ask him more questions of like, hey, like, tell me about a burger spot I would like to get in New Jersey. And I need to see like, hey, does it know based on my searches and the YouTube shorts I watch about food places in New Jersey? Like, can it use all that data to really give me a way better response than ChatGPT or Grok when I ask for a food recommendation in Jersey? Because if it can, like that is a moat that I think can't be undermined. But I haven't seen that yet. Nvidia, we did hit 135. So we got through those 390,000 shares. Those shares are not there anymore. And I think we'll break through again. But let's see if it can get above there. Having said all that, Google's cheap. Having said all that, Google is freaking cheap. And I think it minimum should be at $220 a share. Like, that's like, it does not deserve to be disrespected here. But we're going to have to see how the narrative plays out and how the street thinks of it. Robinhood trying to get back to 67, 66.45. She's trying. And the fact that Robinhood is going green also means markets are anticipating a strong Q2 and some pretty strong bullish sentiment. Nvidia right here, 134.97. CoreWeave, 119. Dude, what is in this stock? What is going on? What is happening? What the heck is happening? Mike Kahan says, Amit, I'm up massively on a lot of Robinhood, wondering if I should trim half and buy back at 45.55 if we get a market dip. Thoughts? Okay, so a couple thoughts. Number one, if your average is like 30 or below and you're generally long Robinhood, like for the next decade, I personally, I wouldn't sell, right? Because it's just one of those things where it's like, hey, you might not get that type of a dip again. You got that dip twice. April, you got like below 30 for a second. I don't know if we get that dip again, especially given how the market's moving. So that's my first thought. Number two, this is why I talk about covered calls so much. The necessity to trim, or the urge, the anxiety to say, hey, I should take some profits. You can mitigate by saying, hey, I bought Robinhood at 30. You personally, Mike, think it can go back to 45 based on your comment. I want the market to force me to sell these shares at 68, at 69, at 60, at 70, right? You write a call for 10 contracts, 1,000 shares at 70. For next month, you get paid a couple thousand in premium. If it gets to 70, you're already okay with selling at 66. You wouldn't be that bad at selling at 70. You sell your shares at 70. And the worst case scenario in that situation, 2 scenarios, Robinhood goes to 80 and then you missed out on those $10 of gains, but you were going to sell at 66 anyway. So it's not like you could have predicted it was going to go to 80, right? You would have been upset if you sold at 66 versus if you sold at 70, if it moons to 80. So that I don't think is like really, something that we can factor in. And then number two, let's say Robinhood goes back to 55.40. Yeah, you missed out on the profits because you could have timed it, but at least you get the premium from the covered call, number one. And number two, it's not easy to time the market, right? So the core assumption in your question is like, hey, should I sell now and wait till it goes down? That's a question that people have been asking for the past 100 years. And, most people can't do it correctly, including myself, because most people are not psychics on what's going to happen in the market. And that's why I'm a fan of covered calls. So that would be kind of my approach of how you navigate that. Rocket Lab, 28.42. That's up 11.4%. Rocket Lab is green. Robinhood trying to break through 66.71. And then VG also 12.49. That's up 9.6%. So VG, Rocket Lab, and Hoodie are breaking out pretty nicely currently right now. Even SoundHound, they had a decent earnings last 2 weeks ago. Maybe people still think the valuation is aggressive based on the earnings, but they beat by 40% on EPS. So that, wasn't a bad earnings beat. 10.83, that's up 13% currently right now for SoundHound. Why is D-Wave down so much? Because D-Wave was up like 50% last week. So yeah, look, if you're in this stock, it's obviously going to be incredibly volatile. I don't think there's a fundamental reason it's down, but when a stock goes up 50%, 200% for the month, it's going to take a breather. So I think it's not something to read too much into the quantum names, but it could be a little bit of the FOMO wearing off, right? So you got to recognize that if you're getting into it just now. But also it's normal because, it was up 200% last month. All right, we are 3 cents away from 70, or not 70, 67. We got a ways to go before 70. We are okay, so we just broke new 52-week highs. There we go, 67. 67, wow. She broke through 67. We are at 52-week highs. The all-time high is at 85, but that was 3 years ago. So we are basically at 3-year highs for Robinhood. Folks, we got to ring the bell. Congrats to Robinhood shareholders. All right, now let's see 70, bro. Now let's see 70. Let's get a 7 on this stock, and let's get out of the 60s. It's probably going to take some time. I expect it to be volatile. Robinhood's probably moving right here with the market. S&P's up a lot. It would not surprise me if we head back down to 62, 63, but it is nice to see breaking these levels. Also, June 6th, S&P 500 announcement. S&P 500 announcement on June 6th. That's going to be a big one. That is going to be a big one. So we're going to have to see how that one plays out. And maybe we get, yes, Hood's all-time high is 85, but it was literally for like a day, and it was in 2021. Like you guys can see, it was like literally, it's even hard to see it on the chart, but it was at 85, and it obviously didn't deserve to be there in 2021. Let me show Webull. It's easier to see it on Webull. And so, yes, we're not at all-time highs, but I mean, we're basically at all-time highs because that 81 was kind of stupid back then. Like Robinhood shouldn't have even been $40 at that time. So we touched $85 on August 31st, 2021. And it proceeded to go to $6 by July of 2022. So, I mean, this stock, it's been through the ringer. It took a lot of hits, but it is nice to see getting some momentum here right now. Bitcoin 110, S&P 587, Palantir 127, Palantir up 3%. It's not bad to see that. Tessie 357 as well. There you go. 357 right here on Tesla. That one's not stopping. AMD's up 4%. Wow, we are green across the board. S&P's up almost 1.5. Snowflake's up 3. SoFi's up 1.3. Meta's up 1.9. Amazon's up 2. Nvidia 135.18. Okay, so we're healthily over 135 on Nvidia. Nvidia 135, Hood 67, Tesla 357, and then Robinhood 127. Not bad. Not bad. Ray, thank you for becoming a channel member. There you go. We're getting Hoodie. That's getting some love, dude. Look, and Robinhood deserves it, man. It deserves it. They've been innovating like crazy. This should have been in the 60s after earnings, and the stock fell to 46 for whatever reason. Obviously, it's contingent on a bull market holding up, and we've talked about it every day. Why I think there's enough components to be able to keep that bull market alive. And if it is, then Hood's going to get more users, going to get more net deposits, going to get more trading volumes, going to get more people buying crypto, which they make a lot of money off of. And all of that is overall bullish for Robinhood. VG up 10%. That's getting some love. Block right here is up 5%. Rocket Lab, I still don't know why space is pumping today. I guess it's because of SpaceX. But Rocket Lab up almost 12% is very nice. UNH getting a little bit of a hit. They had some nasty headlines last week. UNH right here down 1.6%. So that one not continuing to kind of propel into the 320s. It was holding 325 nicely for like a day or two. And then it got hit. Amit, do you think SoFi is an opportunity cost in this market? So I think it has been an opportunity cost. And like that's just like the numbers, right? It has been an opportunity cost. However, this is kind of the moment when people capitulate, right? So when people start selling their SoFi or not even SoFi, when people start selling any stock that is underperformed the market, everything's running and that one stock is staying red or barely green, that's when people sell. And historically, not every time, but we've seen examples where that's the worst time to sell. So is it an opportunity cost? Of course, because there's other things that are going up and they're going up much more aggressively. But does that mean SoFi can't catch up towards the end of the year, which would take away from the opportunity cost? Yeah, of course. I mean, so I still think SoFi can get to 20 by the end of the year. I just don't know what gets it there outside of rate cuts. That is the most obvious thing that gets it there. If it takes some time to get rate cuts, then, again, it might take some more time. The one caveat there is rate cuts will increase their lending business. I'm saying rate cuts are bullish for them, but lending is not viewed as super high tech by the market. So even if they massively increase their lending business, I don't know if the street's going to care. I really don't. I don't know if they grow their loan platform that everyone loves so much based on rates coming down. I don't know if that gets the street to care. And so to me, the biggest catalyst is for them to change that tech platform in terms of its growth. But notice that 2026 is when we should probably see it versus 2025. So is it an opportunity cost? Yes. Does that also mean selling right here makes sense to get into something else? It could mean, but that could be the case. But it also means that SoFi could be ready to head to 20 with a lot of positive catalysts, and people would be really upset if you sold at these levels. But ultimately, it depends on your conviction at this point. It really does, on where you think SoFi can head by the end of the year. And to me, I just think a narrative change is necessary to get the market to care a lot more. Google right here at 172, that's up 2%. Amazon's at 204. VG is up 12%. So that means Cheniere should be up as well. Cheniere's up 0.23. That's at least somewhat green. Constellation Energy, that's up 3%. VRT, that's up 4%. And then VST, all the data centers, that is up 1%. So you do have those greens. Where is Tessie? Are we breaking 358? We are not. We did hit 357.6. So it was close, but at 356 currently right now. And then Navitas up 20%. Yeah, I don't think this is because of anything new. This is because of last week's news, but I guess it's getting pumped even further than the 200% it was up last week. So that one is going green. And then you have Mr. MSTR. That is down. Okay, so let's listen to Saylor for a little bit. MSTR is down again. I think they are diluting shareholders, and you just have to kind of deal with it. But this is what Saylor said in Vegas as we head into the Bitcoin conference.
A 20x levered call option that comes due in 7 days. Okay, there are a lot of those guys on Twitter, and they're always yelling at me. Now stop hammering the ATM, blah, blah, blah. I'm like, the stock's up in 3 months, 1 year, 3 years, 4 years. It's like the only time period is not up is for your 3.5 days when you have your call option. Like, and I'm going to tell you very clearly, if you're the degenerate with the short-dated 20x call option, I'm not running the business to make you successful. Okay, you might, if you hit it big on 100x, whatever levered bet, good, brag about it. Gallivant, take your friends out to dinner. But don't come crying to me, right? If we do something that makes the shareholders money in 4 months.
So Saylor, he's telling you, he's like, hey, like, this is not, stop blaming me, right? He's looking out for the long-term vision, and that means he needs to stack more sats, as the Bitcoiners would say. Is it stats or sats? Stack stats? What is it? It's stack stats, right? Yeah, stats. Or is it sats? I don't know. But like, he needs to stack more Bitcoin. He needs to stack more Bitcoin. Sats. Okay, that's what I thought. Sats. So in order to do that, he needs to dilute. Now, here's the thing. This is the time where you sell covered calls. This is where you give the gamblers the drugs. Saylor's telling you in front of everyone that he's going to dilute you. He's unapologetic about it. He kind of doesn't care. This is the time where if someone's wanting to buy a freaking 390 call on MicroStrategy for the next month, which let me check the premiums right now. This is if you are in the name. Obviously, I don't think you buy the stock just to sell the covered call because it's very volatile. But my point is, if you're in the name and you have shares and you got in early, the 390 covered call, let's just do 400. 400 is paying you $1,400, $14 a contract, which means even if you bought MicroStrategy today, you spent $36,000 to buy 100 shares, 1,400 divided by 36,000. That's a 4% return in a month. Again, it's just like, it's hard to find businesses that can do that. Now, obviously the risk is MicroStrategy falls and your initial 366 after you take away the break even, 366 minus 14 that you're getting for the premium, 352. If it goes lower than 352, you're losing money, which it could. But if you bought it at 200 or something and you're just sitting on the shares and someone wants to pay 1,500, 4% to assume it's going to go to 400 in a month, which it could also go to 400 in a month. That's the beauty of the volatility of MicroStrategy. It could go up as easily as it goes down. That is where, the benefit of covered calls in this market makes sense. So that's what you have on MicroStrategy. Shopify. Is Shopify up? Is Shopify green? Shopify, that's green, up 5%. Hoodie coming down a little bit, just below 67. Tesla 356. Oklo up 3.5. That goes green. Oh, by the way, you know how we were talking about Misty last week? MSTY, the Yield Max ETF for MicroStrategy. Guess who wrote an article on Seeking Alpha that is bullish on the Yield Max MicroStrategy ETF? I want you guys to take a guess, because I saw that notification yesterday morning. I was drinking some coffee. I got that update on Seeking Alpha, and I was like, there's no way in hell this guy is about to buy Misty. But apparently he is. Apparently he is. You guys are correct. Mr. Steven Fiorillo. I called him. I was like, Steve, like, do you need to get your head checked? Like, what's going on? He was like, I did the numbers and it makes sense. I was like, all right, man. All right. I mean, dude, a 10% dividend a month is pretty attractive. So we'll have Steve on the show later to talk about it. But it's not just MicroStrategy. It's the overall Yield Max idea. You're not really buying a stock. You're buying a financial instrument. And the way Steve thinks about it is you should think of your initial investment as a sunken cost. And the only reason you're investing is to get the yield. Now, obviously, that can get very dangerous if things happen with the net asset value or the core premise of the underlying based on whether you're doing it for AMD or whatever. The Yield Max is like a company that does this for a bunch of different names. MicroStrategy is just the most volatile and the most lucrative because it's MSTR. But there's risk to it. But somehow Steve was convinced that it's not a horrible idea. I was very shocked by that, but we'll get him on the show to kind of give his thesis on it later this week. Palantir PLTY paid $7 a share. Dude, see, that's insane, bro. That's insane. MicroStrategy pays like, I think 15 or something. It's insane, bro. It's insane. But look, his article made sense. The numbers make sense. It's just the risk is the underlying gets screwed. Let's say Bitcoin tanks and MicroStrategy tanks, then MSTY tanks, or AMD tanks, and you're doing a Yield Max on AMD, and then so you have to be bullish on the underlying, but you have to not care about the price that you're buying for the ETF because you're using it as a vehicle to generate yield. And you're just hoping over the long term that price appreciation, almost like a dividend stock. Like you buy a dividend stock not for capital appreciation, but for the yield. It's just the way they're doing these synthetic covered call strategies in the Yield Max ETFs. They're kind of hypercharging that dividend yield. But obviously the risks are that the underlying can take an aggressive hit. And so I think that's the way people are kind of rationalizing it. Cheesecake is up 5% on the day. They had a good earnings a couple weeks ago, so that one's up 5%. Big Bear AI, is that up 20%? Holy crap, that's up 17%. I don't know if they got a government contract today or anything. And then CoreWeave, wow, 121. Goodness gracious. CoreWeave is the biggest outperformer of the day. New all-time high, 121.35 on CoreWeave. This is pretty wild. Yeah, Adam, we were talking about Misty. Adam had a live stream, and I asked him about Misty as well over the weekend, and he had a great explanation on his channel. Shout out to Adam. He was on the channel a couple weeks ago. And it's funny, Adam and Steve, you don't think Adam and Steve would come to a conclusion together on a stock. Like Adam is more of a fan of MicroStrategy and the Bitcoin stuff. Steve hates Bitcoin. And so I've got Adam, who's one of my good friends, who likes MSTY. And then you got Steve, who's one of the most conservative investors, in my opinion, when it comes to crypto, and he likes MSTY. And I was like, goodness, bro, this thing, I guess it was able to convince some people. MicroStrategy, though, down on the day, because Saylor is tapping the ATMs. So that's what we got. Is CoreWeave not becoming a meme stock? I mean, dude, it's hard to say that. It's definitely not aggressive. Market cap is 57 billion. They're doing 4 billion a year in revenue roundabout. Price to sales of 30. They're not profitable if they are profitable, it's a very small profit. They're spending 3x their revenue on CapEx. So if they bring in $1 billion in revenue, they're spending about 3.5 billion on CapEx. And then all their equipment is depreciating every year, which is another expense. Tesla back to 357. So I don't know why the street would pay a 12x multiple on revenue for this stock. I guess you could point to growth. Or you could point to just like AI data centers exploding so much and Nvidia is not going to be able to handle all that demand. And that's where you get into the GPU reselling business. And there you got Nvidia. Charted said, Nvidia, please don't talk numbers when you own Palantir. Dude, that's the worst. Every time I see price to sales, I'm like, oh, price to sales of 30. And then in the back of my head, I'm like, all right, I can't really, Palantir price to sales of 96. Like I try to, be like, oh, 30 is a bit aggressive. And then, you have everyone saying, well, don't you like Palantir? And I'm like, yeah, but that's different. that's, you know, you have a, you know, the CEO's different, you know, ontology. It's like but still, dude, a price to sales of 30 on a regular stock is pretty aggressive. Palantir is a unicorn. It's a little bit different on Palantir, even though I acknowledge 96 is also aggressive on Palantir. But yeah, that's pretty intensive on CoreWeave. So did we get 358 on Tessie? Did we get it? No, 357.60. 357.60. Amid Rocket Lab USA changed their name to Rocket Lab Corp. Is that why the stock is pumping? Because they changed it to Rocket Lab Corporation? I mean, new name, new me or something? Like, is that what we're doing? There we go. Amid, how long do you have to hold the yield max stocks to get the monthly dividend? I think a month. I might be wrong on it. I'm not an expert on these, but I think it's a month. I think you have to hold it. Or no, actually, I think you have to just buy it before the X dividend date. I think you literally just have to buy it a couple days before. I'm not fully sure on it, but I think a couple days before. You'll have to confirm, but I don't think you have to hold it for a month to get the dividend. Rocket Lab right here, 28.27 and Palantir 126.77. Also, I want to show you guys something because a lot of people have been messaging me privately about this, and I feel like I need to kind of just set the what is this thing? Set the air clear? Set the record straight. Set the air clear. What is like set the record straight? I think I just need to take this moment to set the record straight. So a lot of people have been asking me, a lot of people ask me this in Boston as well. You know, Amit, you know, are the bricks real? Are the bricks actually real? Are they fake or are they real? And I'm just getting tired of this. And it's getting to the point where I think I need to set the air clear. And so this morning, I used, you know, my defense contracting guns, as you can see right here, and I ripped out a brick from the wall. And this is a real brick, as you guys can see. It's real. And I to let you guys know it's my brick, I put in right here. Wake your ass up and let's get into it. So I think now you guys see it's not, I can't freaking, it's not like mushy or anything. It's a real brick. It's from the wall, as you can see, and matches the architecture of the design. And so someone said 404 muscle not found. Okay, that's kind of rude. I'm not going to lie, that's kind of rude. But anyway, this is a real brick. Shout out to Steven Toro. Shout out to my brother. He came to the Boston meetup. This gift, I don't even know what to say about this gift, bro. I don't know what to say about this. This is absolutely insane. He said, Amit, I got something for you. I was like, all right, what's up? He pulls out a freaking brick. I mean, like, I don't know what to say, bro. Like, I looked at this and I'm like, there's no way you did this. And he hands it to me. So this is my guy. He's been watching the channel for damn near 3 years now. There he is right there. He's getting his PhD in biomedical chemistry. And he loves Bitcoin. And he's been telling me to buy Bitcoin for 3 years, but I ignored him. So now he's up a lot on Bitcoin and I'm not. So shout out to you, man. This was super awesome. There's a picture of us with the brick right there. That was cool. That was pretty cool. So this will definitely be heading to the new apartment. And I appreciate you, man. Like this is the reason I do this stuff. This is like, it's, you know, for people to care enough to order a freaking brick and have it engraved. Like, I don't know what to say, dude. It's hard to put into words how that makes me feel. It's like, it really, really is special. So shout out to you, brother. There he is right there. Biomedical sciences. Love this guy. Been watching for so many years. I'm so happy I got to meet you in person. And so many of you I've been known for years just through the YouTube chat. It was so awesome. I gave him a big hug as soon as I was like, I've been seeing you in the chat for 4 years. He was there on those Finance Junkie OG podcast days. And, you know, he's still here in the chat every day. So, and he got Rock Lab right here, 2831. He got me to show you guys that the bricks are real. You know, like it's hard to deny that the bricks are indeed real. It's a real brick. It's part of the community. It's part of the show. It's a real brick. So, and whoever said 404 muscles not found, I respect the humor in that, but that was mean. I'm just going to say that straight up. That was not nice. Let's see what the professor has to say about the bond market, tariffs, all that stuff, and see if he's bullish on the broader markets.
Optimistic or super pessimistic, given where things stand, and then you throw this budget issue and the bond vigilantes out there, and how do you overlay that?
Okay, so we finally have a reason why Rocket Lab's pumping. It got into the Russell 1000. There you go. That's the reason. That makes sense to me. Thank you, June, for that. I've been waiting to have a real reason. So there you go. Rocket Lab, Russell 1000. Congrats to the Rocket Lab Bulls. There you go. That'll definitely pump the stock. New ETF, new buying. There you go. Rocket Lab up 10% right now.
Yeah, Andrew. And, one of the oldest expressions on Wall Street is don't fight the tape. I'm looking at that tape, and I said so over a week ago on your program that I saw strength that you would not expect given, everything that's being thrown at the market. So the market is seeing something. And what I've concluded it's seeing is, first of all, that they're seeing that tariffs are going to be, or hopefully are going to be, no worse than 10 across the board and 30 with China. And they feel they can deal with that. That's why that shock last week kind of temporarily shocked the market, but again put back. So 10 and 30, I think they say we can deal with that. Not that it's a good thing, right? I say if there weren't all that, we would be at all-time highs now. But they're looking beyond that, and I think they're really looking again at the potential of AI improving productivity. Your predecessor program before Squawk Box, the Worldwide Exchange, had a report on the banking industry and the adoption of AI. And one bank said, it could replace up to 50% of its workforce by, using AI in their productivity plans. I mean, this is huge. All the 1.82% projections that the CBO, that the Fed has as long-term growth, they've never changed. Like AI just doesn't exist. But AI could make that 3% or more. I think that's what the market is telling us. And therefore, not only, can we deal with the tariffs, but by the way, 3% real growth, that deals with the budget deficit.
Okay, we'll get back to that in a second. Basically, again, Siegel saying, hey, if we get growth, we can deal with the deficit. Rocket Lab right here is up 11.4%. Okay, so I'm not seeing the full source that confirms the Russell 1000 inclusion. And maybe it's because it just came out. So for anyone who's seeing that, please let me know where you see it. I don't see any articles on it yet. I think that is the truth, though, because and that's the best way to justify up 11%. But I'm trying to get to the rebalancing website and see where they made the official announcement. So if that is the core reason and that's what's happening right here, then yeah, it's trading like it anyway. Regardless of if it got in or not. But the rebalance, last week, I remember like the Russell rebalance was happening this week. So that does make sense. It checks out that it should be in there. And if it is, then boom. And the market's going to be very excited. Yeah, it's not. Okay, so it's not included. It's not in the rebalance, but it's declared. My question is, where is it declared? That's what I'm looking for. It gets included in the third week of the month. So, Rocket Lab was added to the Russell 2000 index, not the Russell 3000 and not the Russell 1000. The inclusion is based on Russell 3000 market capitalization, not the Russell 1000. Okay, so that would be the IWM then, if it got in there. If they got into the Russ 2000, IWM right here at 1.7, which makes sense, dude. Rocket Lab's a $12 billion company. It deserves to be in the best small cap ETF that's out there. ChatGPT says it's 2000. Okay, I'm going to try to get the exact source, but I think that is the reason. And if that's the case, then yeah, dude. I mean, that's a big move for Rocket Lab. If you got Russell exposure, you got a lot of companies or a lot of money managers that have to get small cap flows into the Russell. And as a result, they're going to be buying more of Rocket Lab.
And both of those factors, now it's not a slam dunk, but I'm seeing what I think is the way the market could have so much strength despite the so-called negatives that are hitting it from all ends.
So if I handed you $10,000, $100,000, $1,000 today, what would you do with it?
Oh, I'd put it in equities. I don't think.
But just when you say you put it in a mutual fund,
it's hard to say because it's not necessarily just because AI is going to boom that the AI providers that we all think of as the Mag 7 are necessarily going to be the best. Here we have the financials, the users of the AI might actually get more productivity while the producers of the AI, more competition. Doesn't mean they won't thrive. Doesn't mean everyone won't thrive. But equities, by the way, are the way to go. And by the way, if you do worry about the deficit and potential inflation, which is what excessive deficits produce, you want to hold real assets. And stocks are real assets. And proof is in the pudding. In the long run, stocks overcome inflation. They give you an after inflation rate of return. And so, any investor looking now and saying, worry about inflation, I don't think bonds are the answer. I still think diversified equities and international, certainly. I mean,
JP Morgan came out this morning. They also said international is a big part of their bull case as well. I agree. I don't think bonds are the answer. I think equities are the answer, and the market's acting like equities are the answer as well. Yeah, a lot of you guys in the chat are confused. Some of you are saying they're moving to the 2000. Some of you are saying they're already a component of the 2000. They're moving to the 1000. I think that is the correct source, but I'm not getting a headline or a press release to confirm that. I'm pretty sure that's what's happening. That's the reason the stock's moving as aggressively as it is. But once I get the exact source on which index they're moving into, I will let you guys know. My gut is telling me right now that, based on what I'm looking at, they're already in the 2000, so they have to be moving to the 1000, not the 3000, which means they're getting rebounced into more funds that would be allocated into them, just not in that IWM, which is bullish for Rock Lab. Should be overall bullish for Rock Lab. Yeah, they're already in the 2000 right now, going to the 1000 during the reconstitution. And the reconstitution, I believe, is June 25th, like the last week of June. That's when the S&P 500 rebalances. So that's why the stock is reacting right here. It might react later in June as well, but right now is when we're seeing the actual announcement, and that's why we're seeing the gains right here. CoreWeave still at 120, Palantir 125, Cheesecake 55, Tesla 355, Robinhood 66, and then Salesforce 275, Bitcoin just below 110. Currently right now at 109. Look at SBET. What is this one? SharpLink Gaming. Holy crap, dude. 480%. This is why we're in a bull market, bro. This stuff doesn't happen in a bear market. Market cap of $27 million. The stock has gone from 5 million to 27 in a day. SharpLink Gaming. I would not chase this. You kind of missed the run of a 500% move today. If you didn't know what SharpLink Gaming was, I don't know why they're mooning so much, but there you go. That's up 500%. This stuff happens in a bubble. I mean, yeah, like there's some froth here, bro. I'm not gonna lie. There's not, like CoreWeave itself is an example of some of the froth that we're seeing. But if there is a narrative of growth that can outweigh that, which is basically what Siegel's saying, then we should be able to kind of move higher as well. They're investing $425 million in Ethereum. My goodness, dude. These companies are just finding a way to become these like crypto treasuries. Ethereum's up 5%. And, people thought the ETFs would take Bitcoin to the next level. People thought corporate strategic reserves or country strategic reserves would take Bitcoin to the next level. All of that is cool. But the corporate treasuries, the MetaPlanets, the MicroStrategies, the SharpLink Gamings, the GameStops, we'll see. Like, these are the things that are just going to keep giving a bid. The Semler Scientifics, all these guys. They're the ones that are keeping this thing elevated. And it's not really retail. We looked at the data last week. Retail is really not aggressively downloading the trading apps or searching for Bitcoin on Google. So I do feel like it's more institutional. And then you have China and the Saudis. You might be getting some of that exposure as well. But you're definitely seeing a lot more big money come into Bitcoin. That's creating some momentum. Why is Palantir not buying Bitcoin? The same reason Hood or Coinbase are not buying Bitcoin. It's volatile. And, already Hood, Bitcoin, or Hood, Palantir, Robinhood, these stocks are already so volatile. I don't know if they want to introduce more volatility. Now, granted, Robinhood doesn't need to, because Robinhood's not a crypto business, right? Crypto is part of their business, but they're not a crypto business. Palantir doesn't need to do anything with crypto because, they're a software company. Coinbase, it's weird. Like, they're losing some brownie points in my eyes to not buying Bitcoin. Like, they are literally one of the biggest crypto reserves on the planet. Or crypto exchanges on the planet. The idea that they wouldn't put their money where their mouth is and buy Bitcoin, I don't know. It's kind of telling to me of just like, hey, like Saylor's the only one who's like, nope, it's going higher and I'm putting my money where my mouth is. And Coinbase is still acting more as a corporation versus a Bitcoin corporation. But it wouldn't surprise me in the future if they had more Bitcoin. It is weird though. You would think Coinbase would put some Bitcoin on the balance sheet, but they just haven't done it. They don't believe in it. Dude, that would be funny if they actually didn't believe in it. But Brian Armstrong's, Brian Armstrong built one of the first exchanges for Bitcoin back in 2012. So it's like it is. I think they believe in it. I just also think the volatility of owning it as a S&P 500 stock is something that they probably don't want to just deal with right now. Yeah, FICO's still down, dude. Again, I'm still doing more research to understand why the market is so upset with FICO. I think it definitely has to do with the FHA, and Fannie and Freddie plays a little bit of a role, but this one, you do not see FICO take a $200 beating in the course of a week on your average trading session. I mean, that just does not happen for something like a FICO. Coinbase doesn't want to be FTX. Yeah, but FTX, it wasn't about them owning Bitcoin. FTX was just like doing fraud. FTX was literally taking money and giving it to a sister quant fund called Alameda Research to gamble with the money. And then the trade went wrong and they didn't have reserves. And like FTX was just pure fraud, which by the way, I don't think Sam Bankman-Fried is going to be in jail for 20 years, bro. I think he's going to get out before Trump's done with his term. I think there's a world where he's out like in the next couple of years. But yeah, I don't think it's about them buying Bitcoin. It's more so just a question of them properly allocating the capital. It's more so a question of, look, they can get a better yield on the treasuries if Bitcoin's super volatile, but Bitcoin's been great. So they could have got a way better yield on their Bitcoin versus their cash and treasuries. I guess they just thought treasuries were a bit more safer. At least for now. Again, TLT, dude, that stablecoin legislation and the supplementary leverage ratios, as those two things ramp up, TLT up 1% right here, we are going to see yields come down. And when we do, I think TLT is the most obvious bet right here. So, do we really think the 10 years going to 5% or the 30 years going to 7%? Like, I don't know. I feel like it's topped. And if it's not, I guess we're wrong. But like, if it is, then this should be one of the more obvious bottoms. I know we're looking for like, what's something that's obvious in the market right now. A lot of stocks are green, so it's hard to say it's obvious to like buy anything into the strength. But TLT feels the most obvious to me, absent a credit crisis. And hopefully we don't get one. S&P is still pumping as well. Yeah, S&P, dude. It wants to go up 2% on the day. It's moving with that momentum of 1.6%. My goodness, dude. We were at 590 last week. We fell to what, 572 after the 20-year bond auction? Back at 588 right now is not too bad. Palantir 125. Rocket Lab still holding 28, IWM at 206, Coin 265, S&P 588, and then CoreWeave still holding 119 right now. Any news from the EU tariffs? Yeah, so Trump's delaying the 50% tariffs from June 1st to July 9th. So it's going to take about a month for them to do that. And as a result, that's going to be really good for negotiating, and hopefully that leads us to a better deal. He also had a conversation with the president of the EU yesterday, the European Commission. It was a good call. Trump tweeted that it was a good call, and as a result, that trade deal should be a lot more bullish than not. Webull, again, didn't have the best earnings. Webull right here at 1278. That's up 3.82%. I was not impressed by their earnings. I don't think this stock is really that cheap based on those earnings. I'd honestly buy Hood at 60 over Webull, to be honest. The bull case on Webull is not that bullish. It really isn't. And the valuation isn't super attractive given the growth they put out was subpar. Yeah, maybe as a trading vehicle, it's attractive. I know there's a retail army behind it, but there's not something exciting about this stock, dude. It's other than the fact that it pumped to 80 and now it's back down to SPAC prices. But I don't think there's a really super hardcore long-term vision on Webull. My October Soundhound calls up 50% today. Look, it's really nice when calls into the future are up aggressively as the underlying moves up today. I don't know if in October we're still going to have this type of a risk-on appetite. And no, I actually think we will, because that's when we kind of get into the Santa Claus rally, but I don't think that's going to come without some pain in July and August, which tends to always happen. And remember that chart I shared with you guys a couple of weeks ago? It's that sort of 2025 post-election aggregated data. We tend to peak around July, August, take a nice little 4 or 5% dip, if not close to 10% dip, although we already had that 20% dip back in April, so we don't need to have another 10% dip. But it wouldn't surprise me. And then we rally into the end of the year. So, maybe take some profits when you're up really big right now, especially on calls, because they're going to get crushed as we get closer to the expiration. But we are getting some moves on the underlying that is helping momentum. Reddit, where's Reddit? 102, that's up 2.09% as well. And then Big Bear AI is up 20%. Do we know what crypto DJT is going to buy? I have no idea, but I imagine it would be Bitcoin and Ethereum because his son, DJT, down 9% right here. Donald Trump Jr. talks a lot about Ethereum. So I would imagine it's BTC and Ethereum. I doubt they would buy the Trump meme coin. If they do, I mean, that'd be the most egregious attempt to pump the coin, but I doubt that wouldn't be the case. Webull has a PE of 10. Why are you upset about the growth? So if you look at their actual user growth, their options growth, and then their equities growth, it's like 15%. User growth was 8%. So like you can't just be fooled by the PE being small and the top line revenue growth being 30%. Like what parts of the actual business are growing? They can grow revenues, but if they're not growing users in what has been a relatively bullish market for the past year and a half, and their options, like Robinhood's growing options 55%, Webull's growing at 10%. Like that's not encouraging, bro. That's not like, oh, there's a massive level of people on Webull. Net assets under custody is 12 billion. Like there's just nothing here that to me is saying, oh my God, explosive, this stock's gonna go to 25, 30. And if it does, great, but I don't know where the growth is coming from to get there. Because again, brokerages, they're not hard businesses to understand. Like if you're in a bull market, you're gonna have more people trading. One of the reasons Robinhood has been so good is because it's been a bull market for 2 years. And then all the innovation that Robinhood's been coming out with, I don't think any of us expected all that to kind of be the cherry on top. But the point is people will open up their Robinhood accounts again or deposit into Robinhood if sentiment is good. And sentiment has been good for the past couple of years. Sentiment got bad in April. Robinhood fell 50%, right? Like it's not that hard to figure out how the stock reacts to the business. Webull, sentiment's good, but the company is not massively growing. And so if they're not capitalizing on all this sentiment, then what is the super, super exciting bull case on Webull? I guess is like, my core question for the stock. Oklo's still up on the day. Navitas up 20 or up 30%. Oklo right here up 2.5. Navitas up 30. Let's finish up with Mike Wilson. So again, I think he made some really good points on this podcast on Saturday when I was listening to it. And again, he said retail is buying aggressively. And because retail is buying so much, there is a world where that demand is not going to fade out anytime soon.
Here's a stat you may know because you still talk to a lot of people in the business, but like our work suggests that right now, retail is buying $5 billion a day, steady state. Okay. Systematic strategies, CTAs, are buying about $5 to $6 billion a day for the next 30 days, because unless the market really falls out of bed, they're trend following. And corporates are buying about $5 billion a day. So you have $15 billion a day of demand in like S&P type products, NASDAQ 100, whatever, the big stuff. I mean, it's hard to imagine that you're going to get much. Like today's a good example. I mean, like, okay, so Treasury debt downgraded last week.
Yep.
Okay. Then JGBs go wild. They pass a tax deal that's not really, friendly for the bond market. And what do we sell at 1%?
Yeah. Yeah.
Rally.
Yeah. The market was down in the morning and now it's up 45 basis
points.
That's
that $15 billion of demand.
Yeah. But I guess, the 10 years, I guess it's coming a few basis points too. So like, you're saying it's kind of benign. When you think about those sorts of inflows, okay, like, is it the sort of thing that, is that normal? You know what I mean? Like, is that, yeah, no,
I think it's one of the things that's changed a lot in the last 20 years, the systematics especially.
Yeah.
And retail now, I mean, they've built up a lot of wealth.
Yeah.
And they've been trained. You buy every dip.
All right. So here's one in 17, 18.
I mean, it's true, right? Retail has been trained. You buy the dip, and kind of if you're a retail investor that believes you're in a technological revolution and that there's momentum around all these names and you're doing your own due diligence, you're not outsourcing it to a financial advisor, you're going to take advantage of different dip opportunities. And that systematic flow of capital that's not going to wealth advisors who would be in cash for you. But if you are deciding, no, I'm going to buy Palantir on the dip, I'm going to buy Hood on the dip, that's a lot more money coming into the market. It's a lot more money coming to the market. I met a couple people in Boston. I met one lady who actually works at Nvidia. She's been there for the past 10 years. So, she's done well with her stock. But she's consolidated her portfolio into a couple names, and she fired her wealth advisor. Because I mean, obviously her being at Nvidia has allowed her to see what it means to be invested in a single stock and that return compared to an S&P 500. Not saying you shouldn't have S&P 500, but the point is just like if the wealth advisors would never allow her to concentrate that aggressively into an Nvidia, she's also in Palantir and Hood, then it's one of those things where you're just not going to be able to outperform as aggressively. And again, she's not alone. Many, many people that I've been talking to, all of you guys in the chat, even if you have some financial advisors, most of us are managing our own money. And the hedgies think we're not smart enough to do it. And, they've been wrong for the past 5 years in a really epic way. But if you do think you are smart enough to manage a portfolio, Nvidia, by the way, 135-27, and be able to hedge against it with covered calls and puts and be able to buy the dip strategically or sell strategically before things go down. I mean, like retail is not this monolith of just idiots that were buying GameStop in 2021. Which, by the way, a lot of those so-called idiots made a lot of money buying GameStop. It's just if you bought at the top, it did bad. But, if you bought when it was short at 150%, you've done very well. And so from that perspective, it's a new world. It is a brand new, Steve talks about this a lot. There are systematic inflows of retirement accounts every 2 weeks that are probably the reason why Apple is able to hold a 30 PE, even though Apple's really not growing enough to justify that. Same thing why Palantir is able to catch a bid at 120, even though Palantir obviously is trading at an aggressive multiple as well. So it's something we can't ignore, even if you don't like that. But you not liking the fact that there's more money coming into the market because it shouldn't be being deployed doesn't mean that money won't come into the market and that valuations won't be able to accelerate. The only hope I think that all of us have is that AI and the growth wave from AI is going to be so transformational that it will be able to accelerate the ability for those stocks to grow into their valuations. And it would also be deflationary, which will be very good for growth stocks as rates come down over the long term. And that's kind of your kind of core bull case, at least for Morgan Stanley, on net inflows coming into the broader market. FYI, there are some great wealth managers in the world. Yeah, I agree, dude. I went to dinner. So I had dinner with shout out to Brandon if he's in the chat. I went out to dinner with Prakash, who's a friend of mine in Boston, and Brandon. And Brandon brought his girlfriend, and it was all four of us at a steakhouse. I got medium well, as always. I tried to get them to get medium well. I even told the waiter to, like, he said medium rare. I was like, no, make it medium well. The waiter, he respected Brandon's wishes, but I tried to get him to medium well. Him and his girlfriend are literally both financial advisors. And so it was so funny to just talk to them about what it's like to be a financial advisor. And, they also acknowledge that their industry shouldn't really exist because they manage their own money. And they're like, AI can do pretty much everything we're doing. Like when clients ask us questions, like you could be asking ChatGPT this question and get an easy answer. So it's even they're acknowledging that although there is massive demand for financial advice, and there always will be, there is a bit of a consolidation for people that want to be a little bit more ambitious and do their own research and manage their own money. And that's not going to be the entire industry, but that is a sizable amount that's creating these inflows every day of people that are willing to take their own risks. And so I think we're definitely seeing a change overall in the broader market. Why is CrowdStrike almost at $500, dude? $471. This is up 4% of the day. They have earnings, I think, in a week. Palo Alto had a not so good earnings in terms of guidance. That one got hit, but CrowdStrike going green. And it looks like it wants to get into that $500 range. CrowdStrike already is part of the S&P 500 for those that are asking, by the way. They got into S&P before Palantir like a year and a half ago. So they don't have that catalyst coming up, but CrowdStrike's growth has been incredible over the past couple of years. Okay, cool. So let's see, what else do we have? Thoughts on Nvidia earnings. We talked about it on the day today. At night, Roy and Tanner and I will do our podcast and we'll go more in depth on Nvidia. Look, I think Nvidia is going to crush it. I just don't know if the raise is going to be enough to get the market to give it more of a premium from that 30% that they got right now. So speaking of Nvidia, we did have a JP Morgan update today. They believe Nvidia is going to miss. So here's what they wrote. Let's talk about this one from here. Yes, NVTS is booming. Again, we talked about it. More Nvidia data centers. That's what's helping them get up even more today after being up 200% last week. So JP Morgan said, as seen in our somewhat frustrating buy-side survey, interpreting this quarter's Nvidia guidance is extremely challenging. So already you have the Wall Street firm saying, hey, this one's not going to be easy for us to predict. Assuming all else equal, we estimate that the export ban on the H20 will remove $15 billion from Nvidia's full year revenue. As a benchmark, this implies 7.6 billion impact for each of the June and September quarters. While most sell-side analysts haven't fully reflected this issue in their forecast, we had expected the buy side to have priced it in to some extent. However, based on actual survey results, many investors still had not accounted for this impact. In fact, we believe buy-side expectations for the June quarter guidance may fall short by close to 7 billion, which the stock would not be happy if that happens. Yet the average shortfall from the survey came at only about 920 million, or about $1 billion. So they're saying, hey, most analysts aren't looking at the $7 billion loss for the June quarter guidance. Now, maybe Nvidia thinks they're going to get that June revenue coming from China because they're negotiating with Trump. But if they can't guarantee that, then they're going to have to reduce that guidance, and that could be losing expectations. And then they think margins are going to get hit. So they say margins are likely to be significantly impacted due to necessary write-downs. 1/3 of their survey respondents expect first quarter gross margins to be around 58% versus the consensus sell side estimate of 71%. That would be a big hit. And then the remaining 2/3 of responses were concentrated in the 65 to 72% range. If Nvidia comes out with guidance that is $7 billion lower than what the street's expecting, and gross margins at 58% versus 71%, which again, it was at 77% last year this time. It's now in the low 70s. Nvidia said by the end of the year, it'll be back to the mid 70s. If they come in at 58%, even if it's because of a one-time thing, I don't think the stock bounces up to 150. Unless their guidance raise for the full year, it like overcomes the 17 billion they're going to be losing from China. So my thoughts on earnings are that it could be a dud. It could be really flat. I'm not selling covered calls on it, at least aggressive covered calls, because, you know, the risk is that it's a big quarter and that it does well. But I also think if you're selling aggressive covered calls, I don't think you're going to be screwed per se, because there are some headlines that might not be reflected in the buy side analyst versus the sell side. And that could lead to a bit of a miss. Now, again, if we have a miss because of margins going down or because of China expectations, that would create a very juicy dip. And I would love to have cash to buy that dip, because that's not the full story on Nvidia. But in this quarter, like every company that experiences a quarter that could have one-time issues, you know, that could give us the dip on Nvidia. Corey right here at 118, and then Navitas, this stock 37% on the day. 37% on the day, and SMCI moving with it. SMCI right here up 7%, Navitas up 37%, Nvidia up 3%, AMD should be up about 4%, AMD right here 4.14%. There you go. There you go. Thoughts on the Arrow IPO? You know, I haven't researched this company. I know that U.S. defense and drones are becoming a lot more exciting to the market, but I just don't know enough about ticker symbol AIRO. But if they develop any level of a following that cares about autonomous warfare and drones, then, you know, the stock could get some momentum. I know everyone's waiting for Anduril. By the way, speaking of Anduril, I'm curious what you guys have to think. Yes, we covered the Trump news, 2.5 billion in Bitcoin. We talked about that. That broke this morning. It looks like DJT will be the next Bitcoin treasury. Okay, so Chamath is back. Chamath tweeted, hey, would you guys invest in an all-in fund, which would be an encompassing fund that would leverage their connections that the all-in people have, all those billionaires, to private equity, startups, and venture capital. And they would take like a management fee to manage the money. But let's say All-In gave you a fund where you could, you know, invest in it, and you could have access to SpaceX and Anduril and all these companies or whatever. And they would essentially manage the money and pay you distributions over the lifetime of the fund. Who would invest in this? I am very curious. Let's put that in the chat. Who would invest in this? Invest in Chamath fund, yes or no? What do you think? I'm going to click no right here just to see the votes. I probably wouldn't, but I'm not surprised that 70% would. Look, here's the thing. Even if you don't like Chamath, the thing about Chamath is that it's not just Chamath in this. If it's the All-In fund, it's not just the SPAC king. It's Jason, David Sachs, David Friedberg, people that I think are a little bit more respectable than what Chamath did with the SPACs. And as a result, I think there's going to be a lot of people. I mean, they have the biggest podcast in the world. There's going to be a lot of people that would be throwing some money at a fund like that, especially if they can get you something better than Open Door. You know, they get you something like a SpaceX. Granted, the question is, and this is the fear with Chamath, is he going to pump the stupid shit he pumped in 2021 and use retail as liquidity? And that's why seeing that yesterday made me a little nervous, because I'm like, why is he doing this Is it that is it that this is such a bullish market that he needs to be able to offload some of his investments to retail and get liquidity? Because that's essentially what this is to an extent. Or is the Olin podcast getting so many connections that he wants to be so altruistic and share his democratized access to deals with the rest of the population? I don't fully know. 73% of you saying no here right now. I think if they did launch it, a lot of people would invest, but I do think there are some people that would be skeptical. Kris, good morning. How are you?
Good, man. Just woke up and I actually had an appointment with like a physician of mine. Yeah, and like I got some results. I am officially a diabetic.
Damn, bro.
Not good. Not good.
Oh,
Well, I
man,
mean, both my
sorry.
parents are diabetic, so it kind of made sense that it was eventually going to come my way. So I gotta start to take it more seriously, lose some weight, get off of this Indian diet full of nothing but carbs.
So what is it? Do you have to take medicine now, or is it health routine, or what was the diagnosis?
Well, my A1C is high, so I have to well, I have to lose weight, right? That usually helps a lot. And then on top of it, I'm not like insulin dependent, but yeah, I have some blood tests coming up that I have to start doing. And hey, man, it's just one of those things as you get older,
Well,
things
look, I'm happy you're telling us, because everyone, including myself, as I'm getting older, we got to take care of ourselves, right?
Yeah,
Money
yeah.
doesn't matter if we're, our life is in jeopardy. So
Yeah, it is what it is. Just like I said, I have both my parents are diabetic. I have to make some lifestyle changes that are going to be, like it's going to be hard to comply because like the doctor explained to me, like going through everything, and then they're like, oh, you have to modify your diet. And I'm like, but I love Thai food. Don't leave me alone, bro. But it is what it is.
it's one of those. So we were with Prakash at dinner, and he didn't eat anything, like any of the appetizers or anything like that. It's like you get to a point where you're just like, you realize I've had fun with food in my life, but I can't do it anymore.
Yeah,
I
yeah.
just can't do it.
Those days are gone, bro. Not well. Someone's in the chat. They're like, it's an American diet. Honestly, it's not. It's kind of like an Indian thing too. Like we grow up eating nothing but carbs. And I grew up in a vegetarian family. And vegetarians, we typically eat a lot of carbs. It's just part of our diet. So now I just got to eat more fruits, veggies, chicken and proteins, and just get that up, and then yeah, I'll probably end up on something like Manjaro or something. So we'll see. Like I'm still doing all the consulting with my physician. So yeah. But outside of that, I woke up to a very green portfolio because Venture Global was just killing it today, which is nice.
So the whole market's running. Venture Global up 8%, S&P is up almost 2%. Here's the first question I want to ask you. Japan, it looks like they're trying to get the situation under control. You think this is bullish for the overall credit markets?
Yeah, I think so. I mean, this is operation somewhat kind of like Operation Twist, where I think we've spoken about a couple of times privately, where what you end up doing is flattening the curve by not issuing as much long-term debt and instead focus on issuing short to medium-term debt. So this way it's inflation neutral, right? So that's what's likely going to happen with us as well. So right now, Japan's doing it. I think the US is going to be doing something very similar, where they're going to stoke demand for bills. So
and we talked about that today with SLRs and
yeah. So it's just the people who hold bills right now, and you can tell like there's $7 trillion, in money markets, just loving that freaking 4.5% yield on money with zero risk. So a lot of that money, especially if you're a fixed income person, it's gonna from the bills, it's gonna move to the notes, and from the notes, it's gonna move to the bonds. And so, if that happens, then we'll get a nice flattening of the curve, which means that things like TLT will do well.
Yeah, and our 10-year already is reflecting that today. I mean, they were really happy with these Japanese announcements right here, 4.459. So you think that it is more likely than not that the markets are essentially getting back to all-time highs based on treasury demand that will be stoked either by the Fed or by SLRs?
Well, I can't say necessarily that we'll get to all-time highs in the market. All I'm seeing is the data points that I'm seeing point towards much lower inflation than people are kind of projecting right now, what the market is projecting. If you remember, the market has a way of taking inputs in, but it gets things wrong too. So when we came into this year, everyone was expecting like 5 or 6 cuts for this year.
Yeah.
And then all of a sudden, things kind of flipped with the tariffs, and now everyone went the other way. And it's like, oh, we're getting a no cuts, and now the tariffs are slowly all being lifted. And then I think in this morning, Kevin Hassett reported that they're thinking about lowering the tariffs to like 10% or less for certain countries. So that's bullish. So as these trade deals come along, they're coming all along very slowly, but as they come, people are realizing that, hey, wait a second, maybe the long-term trajectory of these tariffs are not nearly as bad. The other thing is, even from a legislative standpoint, I think some of the news around the Senate maybe being a little bit more heavy-handed with budget controls might actually end up providing another avenue for support with comes to inflation control. But I think the biggest thing is housing, dude. People are really missing the ball on housing. Everywhere I look right now, dude, I see nothing but homes starting to kind of like slow down. Like, this is peak buying season. I'm seeing price cuts. That does not happen very often. As
Why
far
why
as
why do you think that's happening?
Well, there's a lot of inventory coming to market, but with the interest rates where they are today, there's just not a lot of demand because the affordability gap is way too wide. People can afford a certain amount of money before they're just like, look, I'd rather just rent for the next like year, 2 years, whatever. If you
Right.
look at the difference between rentals in certain areas and buying, it's like 3 times. So people are like, I'd just rather rent. It makes more sense economically. And then on top of it, the federal government is doing everything in their power to drain liquidity from the system. So one of the biggest liquidity supports that we had was student loans, right? Student loans were on forbearance for people for like literally 4.5 years. Now all those student loans are coming due, and they're saying, no, you got to pay, otherwise we'll report you to credit agencies. If those people get reported to the credit agencies, that messes up their credit, which means that now their qualification to buy homes and cars and everything else gets damaged, right? So a
Yep.
lot of people are drained. That liquidity is being drained, where people just thought, you know what, I'll just wait it out. And especially because the last administration was pushing, oh, we're going to do forgiveness, I think that caused this kind of like giant wave of people saying, "What? Why should I pay my student loans when this administration is just going to forgive it anyway?"
Yep.
So those false expectations are definitely there. And then of course there's all the reforms around some of the entitlement spending with regards to SNAP and Section 8 housing and all this
So
other
if all that liquidity leaves, your argument is we get a slowdown, which is why we get a rate cut. Is that kind of the
Correct.
argument?
Yeah, I mean, when it comes to inflation, it's usually one of two things: money printing and then a supply and demand imbalance, right? So we had kind of like both those shocks during the Biden administration, where oil and natural gas shot up, and supply was shrunk, quote unquote, by the war. So there were certain things that had supply disruptions and all the other things. And then at the same time, you had the Biden administration literally just pumping in liquidity on top of liquidity and all these support programs. I mean, the damage that the Biden administration did to via Fannie and Freddie is astounding. The amount of fraud that was happening in the background is crazy, and it's being slowly revealed right now. I don't know if you heard of this before, but some people were literally not paying their mortgage, right? And Fannie and Freddie, instead of actually like putting them in foreclosure after, like the 90-day window, they would just keep doing these.
I did read about that. Yep. I read about that.
They would keep doing like, sorry, Sam, Sam's calling me. I got to call him back. Yeah, they kept doing loan modifications. And the thing is, the entire industry was just like, oh yeah, COVID, and they did that. Then there was a whole bunch of people literally living in homes and renting, but then they would never pay the rent, and the administration was slow to move around that. So people had a ton of excess cash that they were going out there spending in the economy. So it kind of looked like, oh, look, everything's great. But so the administration right now is putting in certain requirements, like work requirements.
Okay, but hold on. So I have a question. So if you're correct that the Biden economy kind of had us pumping some artificial liquidity here, and now that's being drained out, that's good for interest rates coming down and inflation coming down, but that's technically bad for the economy. So how are you more bullish on the market if we get a slowdown? Do you just think that rate cuts will help stocks more, even if we get a material slowdown in the actual economy?
Well, it kind of depends, right? Like you want a harmony in terms of growth. You don't want excess growth all built on nothing but liquidity support, right?
Right.
Because then what ends up happening is all these businesses, they all have debt as well. So if that debt is maturing at the same time as inflation is raging, what's going to happen is they're going to all have to refinance that debt at higher interest charges. So right now, the biggest challenge in the market is getting rates lower so that these companies can refinance at a reasonable rate without screwing over their margins. So like I said, imagine right now in 2020 or 2021, you issued debt and you were paying like 4% on it, on corporate debt, or 5% on corporate debt. Right now, if you want that same loan to be refinanced, it's going to cost you 7 to 8%. That's almost double what you were paying less than 3 years ago. So a lot of that corporate debt is coming due right now. And so you kind of want to make sure that, interest rates are higher than what they were 5 years ago, but not so high that they're going to screw over entire businesses.
That's kind of, this is a point Mike Wilson made. Mike Wilson said, if we go back to 0% interest rates, the entire experiment failed.
Yeah, 100%.
He's like, we should get to something reasonable, 2 to 3%, and have a harmony, as you're saying. Because if we go super extreme or to the top or bottom, I mean, it just ruins the entire point of the financial system.
Yeah, because what tends to happen is you create this artificial bubbles in either direction, right? If you lower interest rates to 0% and mortgages to 3%, boom, now all of a sudden everyone goes out there, buys homes, and then when you raise interest rates to 5% to tackle inflation, you've got this huge set of people that are basically locked into their mortgages. And that's one of the challenges that we're dealing with right now, right?
Right.
So every action that the administration, the Federal Reserve, all these guys, everything that they do to kind of manipulate things, it has consequences that show up later on. They don't show up right away,
Chamath, would you invest in his fund?
Nah, man. Okay, first and foremost, the concept that he's going for, which is taking illiquid assets, bundling them up, and then selling it to investors, the retail investors, through, I guess, like an ETF or something, that would be dumb. How do you deal with liquidity? Like right now, imagine, right, you took out $1 billion, you put that $1 billion in multiple companies, right? Quote unquote, that you think are going to return crazy amounts for you. Retail investors, if they want to sell, how do they sell?
They can't.
They're
locked in.
Right. So you got these massive liquidity issues. I mean, it's happening, right? I told you this is happening. PE firms are trying to unload their bags on retail. Hopefully retail is not stupid to buy it, bro.
No, I agree. As soon as I saw the announcement last night, I was like, I don't think this is him wanting to altruistically get retail access to Anduril. Like, Chamath's not that type of a nice guy. I think it's him saying, hey, I've got some shitty PE investments that I can put a nice wrapper on to get retail excited, and then I can use them as liquidity, and they're stuck, right? Because they can't sell. And then boom, I've got my ability to offload at least some of my stake.
And exit. All these guys are looking for exits, So it is what it is. I mean, I don't understand why guys like him exist, dude. I mean, bro, you already fleeced people and made a crap ton of money. Like, why are you trying to fleece people twice? And
the worst thing is there's a lot of people that listen to their podcasts that just like technology and business, that they're not super deep into the markets like you or anything. If one of your favorite business podcasts that you have an intimate relationship with every Friday, you listen to for 2 hours, says, hey, if you have some excess money, I'll manage it. These are vulnerable people that would willingly give that money. Now, I know everyone has to make their own decisions, but the point is, it seems very manipulative, is how.
Yeah.
And they know they have a big audience, so they can get the funds. The question is just, hey, can you actually get people? They're not going to give you Anduril at $10 billion. They're going to give you Anduril at $30 billion, which is very different.
and they're gonna make a ton of money on the carry. You know, whenever I see some of these deals with like what are they called with funds that let you invest in special vehicles, when it comes to investing in
SPVs, special purpose vehicles.
SPVs, I look at the carry and I'm like, holy crap! Like, damn, y'all are getting a crap ton of money for just basically moving some, you know, some. I mean, look, sometimes you got to pay to get access. I'm not gonna say like, oh yeah, you know, no, you can't do that. But it's just there's definitely something in it for Chamath, way more than he's letting on. The reason why I guess people are pissed is like he's coming off like, oh, I'm doing you the favor of giving you guys access to these great deals. And I'm like, you're giving people access to a market that 90% go to zero.
Yeah. 99, and honestly, yeah, 90 to 95% of these companies fail. And,
Yeah.
and we saw this with Chamath in 2021. 95% of his SPACs outside of SoFi went to zero.
Yeah. So it is what it is, man. It's just whatever.
But I think it's important to talk about it because these guys are some of the most influential business people. And if Jason, David Sachs, Friedberg co-signed this and they actually raise a couple billion, I mean, just as a market participant, we have to understand if that's bubblish, I guess, is what I'm trying to say.
I just think that these guys, they still think of retail as being these unsophisticated investors who don't do any research, don't have freaking ChatGPT and Google and Gemini and all these things like within an earshot. You know, I think retail is getting somewhat more educated on how to look at companies, how to find great value companies out there. And they're, you know, I'm sure that there's still going to be a category of people that buy into this thing because this is how it is.
100%.
But yeah, I think these days retail can actually look at these things and somewhat judge especially based on historical precedents, whether they want to be with this person. I mean, half the time you're investing, bro, you're not investing in a company, you're investing in a person willing to put their neck out there. Like when you look at the CEOs, that's why they get paid all this money. These guys are literally the face of the company. And if Chamath is the one putting his face on this thing, bro, no thank you.
Get that face out of here, bro. No, that's the thing. Also, he's too rich to be doing this. Like, that's the part that rubs me. Like, he should be going to like do some other really big deal with really big money. Why is he tapping his Twitter audience to raise funds? Like, it just feels like he's not supposed to be doing this if he was that rich. Otherwise, he's trying to be really nice, which I don't think he's trying to be really nice either.
Yeah, I don't think so, bro. I've never. He just doesn't come across as the type of guy that's like really altruistic, you know?
Yeah, I mean, if he has all these deals that he loves, he should be able to raise a couple $1 billion from super big hedge funds and VCs and go. You know, it's like, why is he going to reach it? It's just very confusing. Like, why?
Yeah. I mean, outside of the TLT talk, I think one of the things that eventually we should talk about is ASTS.
Yeah,
I know
you're getting bullish on this one.
We spoke about it yesterday. Dude, this thing has all the hallmarks of a company that's gonna freaking do really well, not just because the tech is there and they've got multiple catalysts on the horizon, but dude, everything I'm looking at this company is just pointing towards a massive move higher based on those catalysts.
Let's do a stream maybe on like Saturday. Let's do a full 1 hour stream.
Yeah, I think that's a good idea. I'll get Sam on there as well because like Sam's got a ton of DD on it. But for me, when I look at this company, I'm like, huh, okay, interesting. And when
I look at you, all the chat is going crazy. They're so happy we're talking about AST because we never talk about it. Dude, this cult is like, I've never seen this.
No, dude, the reason why it's not well, look, technically it is a cult because there's like a whole bunch of people on Twitter that changed their profile names to like include like a capital A with like a red letter on there. So I mean, I did that too just for the fun of it. I'll change it back eventually. But when you look at the business model that they have on it, it's something that's already been done. It's already proven. The technology is proven, and you've got now, bro, you got freaking Ted Cruz and the FCC chairman doing fucking, I'm sorry, cursing, doing site visits, bro. They were at the factory doing site visits. I mean, come on, you know, if you look at their cash balance, they got almost $1 billion in cash. This is a $7 billion market cap company with a potential to do like $5 billion in EBITDA by 25. I mean, we went over this yesterday, but in terms of total growth, this company has a lot going for it. and I'm not talking about like, hey, a couple of trading things here and there. I think long term, these guys are going to generate a ton of free cash flow, and that cash flow is going to get recycled back into shareholders via either dividends, share buybacks, or both.
I think let's do the Saturday stream. Let's talk about it. I think
yeah, no, I definitely think it's worth it, dude. Especially like I said, there's a couple of people who are really into this, and they've done a lot of research on it. I think bringing them on, I'll see if I can bring them on as well. But basically, this is the way that I would go. And I know a ton of people are like heavy into Rocket Lab, guys. I think the next frontier after AI is space. Okay, if that, I think it's as the days are going on, it's becoming more and more clear to me that space is the next frontier. The cost of launching things into space is becoming cheaper and cheaper by the day, right? You've got the world's most gifted technologist in Elon Musk, a giant proponent of space. So I think the next revolution is going to be in space.
Yeah, and Matt doesn't hate ASTS, right? He likes Rocket Lab more. But we were talking to him last night. Matt we should get him on the stream as well. He likes it. He likes Rocket Lab more, but he doesn't hate this at all.
Yeah. I mean, there's competing technologies out there. That's all it is, So Rocket Lab, they're focused on launching, but then they also, and he educated me on this, no lie. I mean, he gave me like the whole spiel about, look, Rocket Lab is not just launching rockets into space, it's also building satellites up there that connect downstream. And I'm like, oh, that's interesting. Like, and they do like third-party things. The one thing, there's like so much good DD on ASTS because of this giant retail community that follows them. I am shocked at the level of research that these guys in their freaking closet, like what is it called? Closeted autism. Like the ASTS like crowd has got closeted fucking autism that like do research. Bro, there's this guy who randomly was like tweeting about what is it called? Like the frequency bands, about how these frequency bands are better than these because of X, Y, and Z. And I'm just like looking at this and I'm like, this can't be true. Let me verify this. And when you ask ChatGPT, you ask all these guys, like, no, it's absolutely true. Like, there are so many unique features to this company's business model. That's just, I looked at it. I looked at the market cap and I was like, yeah, I'm bullish on it, especially with the free cash flow that these guys are projected to do in less than 5 years. With all of these launches coming up, I'll take it all day.
All right, we'll talk about it. We will do a stream. We'll talk. And people ask me about it every day, but I don't know about this, so I can't really explain. So,
brother, I'm telling you, once you go down the ASTS rabbit hole, it's gonna be hard to get out of it. Because, and I mean, look, everyone wishes they got this at $2. Okay, because this literally last August was $2.
Yeah.
Okay, but sometimes you get them and sometimes you don't. But that's the way I'd say, like, oh, like no one's like, oh my god, I got in Palantir at $6 versus like $10. No one's gonna be all sad and be like, oh man, I wish I had gotten at 6. Bro, if you got in at 10, just be happy. You got yourself a 10 bagger right there, or 12 bagger. So yeah.
Okay, so last question for you, and then we're gonna end it out. Nvidia, big earnings tomorrow. What do you think they say? How do you think they report? And is the market resting on Nvidia's shoulders tomorrow?
I mean, all the deals in the Middle East and everything else, they're definitely going to talk that up. So I think right now we're transitioning from hyperscalers buying a ton of GPUs to now sovereigns, countries buying all these GPUs. I don't know. AI seems to be a more dominant part of people's lives than I originally thought it would be.
Agreed.
I personally, like I said, I use GPTs, I use Gemini, I use these things pretty regularly now, to analyze things. Now, there is one thing that I am a little bit sad at, and that is I feel myself getting dumber.
I feel that as well.
It's the challenge here is that so much of the stuff is being fed directly to you that you're not thinking critically. And I don't like that. Like before, what I would do is I would literally I would pull up, I'd have a spreadsheet. I'd look at an earnings report. I'd look at all the figures. I'd put them in. I'd do the math, blah, 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 and all this stuff. And I'd get a readout. Now like for literally like the last 2 months, I'll be like, okay, go to ChatGPT, ask it a question about this, find information about that, do this, do that, and it does all the math for you and everything. And then I realized
my sister was talking about this yesterday, and she said all the kids, like the teachers, are complaining to her because she works in a school that the kids are using ChatGPT. My retort to that is kind of just like, that means that what they were learning wasn't that important, right? Like,
no. The problem, Amit, is that when ChatGPT gets something wrong, you can't tell the difference between it being wrong anymore.
That's true. That's true.
If you are a critical thinker and you're literally like looking at numbers, when something wrong comes up, you know, like, wait a second, no, that's wrong. How does that make sense? ChatGPT right now has become so augmented that now whenever an answer comes out, people, instead of thinking of it as, hey, let me double check these numbers, they're like, oh yeah, this is the number. You know?
Well, so that's where I think that schools have to teach critical thinking in combination with AI versus just like memorization and regurgitation. Because obviously, if you have a supercomputer with super intelligence in your pocket, you're not going to need that. I mean, I think this is why the UAE is giving ChatGPT to everyone for free. I mean, this to me, they want people to grow up not being stupid, but to grow up learning how to work with AI because they know it's not stopping.
Yeah.
Right.
I mean, I'm a little bit old school in that I still believe in learning all the fundamentals so that this way, when you are challenged with something, you understand the information at such a basic level that you can challenge the answer. Right now, the more and more people use the ChatGPT thing, the less likely it is they use those critical reasoning skills, and they just literally just, you know, they look at the prompt and they're like, oh yeah, this seems 95% accurate, and that's fine, you know. And I don't know, when it comes to me, I like using ChatGPT for probably like synthesis of a lot of information and putting it into one. You know, like I like learning about the concepts that I may not have thought about using ChatGPT. But the problem is some of the concepts it comes up with are completely like wrong. And the thing is, the more I use it, the more I feel I don't need to look up the counter argument against this thing, and that's the problem. Because, like I said, I literally have to force myself to challenge answers that are coming up.
I agree with that, but the actual overall net benefit of using it to me makes me feel way smarter.
Oh yeah, 100%, 100%. You know, like, and I think that's going to be the case for most artificial intelligence things that are going to come out. I think they're going to be very valuable in helping augment humans. I just hope it doesn't come to a point where the AI becomes so dominant that we as humanity, we lose our ability to think critically. It's kind of like spell check. I used to be really, really good at spelling. Now I'm terrible at spelling, where I have some words I don't even like, because autocorrect is so good, I don't even bother like correcting my own spelling anymore. I'm like, yeah, whatever, autocorrect is going to take care of it.
Dude, I barely know how to pronounce stuff. So, I mean, obviously.
I thought that's because you're from Rutgers, bro. I never met that many intelligent people from Rutgers. I'm sorry.
Dude, instead of saying set the record straight, I said set the air clear today.
That's a Rutgers thing, bro. I'm telling you. I don't know what y'all did for 4 years over at Rutgers, but bro, it definitely was not education. All right.
Okay. Actual last question. Elon's going back to Tesla. Your thoughts on that?
This thing is great, man. He needs to focus on things that are going to provide value for humanity. I mean, look, I think he did a great job with Doge. The only thing is, you know, there is a toxic culture around cutting things in government, and it's both sides, right? Both sides are like, imagine Elon says, hey, we need to stop spending so much money on the military, bro. The Republicans will tear him a new asshole, you know.
Yeah.
If he says we need to cut spending on this thing, the Democrats will do that. So right now, no one in government wants to cut back on spending. The challenge is, the only time when government seems to get together and unify is in times of crisis. Like 9/11, let's go to war. Yeah, all of Congress gets together. World War II, everyone got together. The great financial crisis, everyone got together. So I'm telling you, it's sad, but it's only crisis where we're united. Every other time, we're just like, the Democrats are a problem, and the Democrats will be like, nah, the Republicans are a problem. You know, when crisis hits, it's like, we need to figure this out, otherwise the country's gonna go broke. And I mean, maybe that's the parachute we need right now.
Yeah, we need something to really break before both sides come together. But you would imagine this is bullish for Tesla.
Oh yeah, very bullish, dude. I mean, Tesla's got Tesla's got a lot of additional things going for it right now with the humanoid robots that you're starting to see these humanoids actually being able to replicate some of the tasks that humans could do. And I mean, in terms of like total cost savings is insurmountable, you know?
Yeah.
The amount of money that you have to pay a person, you have to give them holidays, you have to give them breaks, you have to give them, health insurance.
Dude,
Bro, these robots,
if we somehow grow GDP and deflate the economy with AI and inflation's like not even a kind of concern in 5 years, I feel like that's a revolution none of us are really thinking about at scale.
I mean, tech by itself is always very deflationary, you know?
Yeah.
There's just because the thing is like it's not it doesn't mean that like people are going to lose their jobs or that's why it's deflationary. No, the reason why tech is deflationary is because of the huge productivity boosts that you tend to get with it. So imagine right now we used to be, doing everything on typewriters and that those pieces of papers would then be filed away and all these little things would happen and that was the economy. And then someone comes up with a computer and now everything gets thrown away. And now the amount of productivity you need to basically type up a report is like 2 seconds. I mean, look at the revolution that we had between libraries and the internet. Huge productivity gains, right?
Yeah.
You're not going to the library, spending gas. You're not sitting there indexing. Do you even know how you would get a book at the library? Like how you
Yeah,
would,
there's the Dewey Decimal System and shit. Like I still learned that stuff.
I'm just chatting. Dewey Decimal System.
Yeah, that's how you like find a book in the library.
Really?
Yeah, you guys know what the Dewey Decimal System is, right? It's like a way the library used to organize the books is based on that system.
It's not the Dewey Decimal System.
It definitely is the Dewey Decimal System, bro.
Dewey Decimal is a library classification system. All right, look, you taught me something today.
See, that's that Rutgers education, baby.
So apparently, Rutgers, you still going to the library looking for books and shit.
Yeah, see, a lot of people recognize it. Okay,
nice,
cool.
nice.
Yeah, but you're 100% right. I mean, AI is obviously going to deflate a lot of these technologies, and maybe that's what we need more than even rate cuts.
I think it's just going to raise productivity, right? Like the amount of effort required to get to an end goal is going to be shrunk so much, and the cost of getting there is going to come down significantly. I mean, I'm looking at like even transportation right now. When you look at these autonomous driving and autonomous things, that's going to be hugely disruptive to the car market. But at the same time, it's also going to increase ton of productivity. I'm hoping that it lowers the insurance, with all these robo taxis and interconnected cars. I think if you think about 2035, if everyone's driving in these smart cars that basically talk to each other, that slow down for each other, that speed up and take away that human element that's notorious for crashing into each other, dude, insurance rates could go down significantly because the number of accidents could go down.
Yeah. I don't know.
Here's a question to you. You did that Boston trip. Did you feel safer in the Tesla than you did, like, let's say with a human driver?
Yeah, dude. It's crazy. I know people won't believe me, but the reason I made that video is because I could not believe that I didn't have to touch the car for 5 hours. And the thing is, like with an Uber driver, there's like it's someone physically driving, so there's always little twists and turns, and like this thing was it's a computer. It's going to stay at the same speed limit. It's going to stay at the same direction. It's not going to be twisting and turning from the curves unless it is a lane switch. It was unbelievable. It was unbelievable.
Yeah, I mean, look at how many errors are caused by humans with falling asleep at the wheel, like not noticing blind spots, all this other stuff that are human errors that can be taken away. I mean, if you do that, dude, the cost of insuring these cars could go down significantly, especially if the cars end up talking to each other. I hope one day Tesla gets together with like GM, Ford, and all of these guys and sits there and says, look, let's make all new cars have like transponders in them that talk to each other. This way we can kind of prevent crashes in the future. And I feel like in the next 5 years, if your car doesn't have an autonomous feature in there, you're basically backward. You're not going to sell cars. It's like right now with rear view cameras.
Yeah.
Like 10 years ago, like having a rear view camera was like, oh, a rear view camera. Now every car has standard rear view cameras.
Yeah, that was the problem with my Civic. I couldn't see the back when I like now with Tesla. Like if I press reverse and I don't see what's behind me, it's like, I agree. This generation of autonomous vehicles are starting to become more prevalent. What I experienced over the weekend made it obvious to me that it's happening. Now it's going to be a debate between Waymo and Tesla and who actually gets the cost per mile down. But the point is, we're going to be living in an autonomous world within the next 5 years, easily.
Yeah, and especially if some of the people here, like I'm gonna drive a manual transmission, and you have every right to drive your manual transmission, but once again, the insurance companies will determine what your cost is based on driving habits, but on top of it, if you are driving on autonomous or not, and if they find that autonomous cars are a lot more safer, less accident prone, bro, that means that now if you have a non-autonomous car, you're going to have to pay through the nose for insurance, And if that ends up happening, it's going to basically drive everyone to buy these autonomous cars. So I think the future for autonomous cars is bright, man.
And what Chad says right here is exactly what I experienced. So he says, whenever I drive with FSD, I drive more rested, not because I wasn't paying attention when I was sleeping. There's something about it doing all the micro decisions and you overseeing removes the mental load. Like, I just wish people could experience what I experienced at some point in their life, multiple hours of not having to worry. You have to pay attention. You don't have to worry. And once we get unsupervised, I'll actually be able to like do some work during that time. But just not having to stress about putting my foot on the pedal and like pressing it down and taking the exit. It was unbelievable. It is a hell of a product, and it's only going to get better from here.
Yeah.
Which is the most exciting part.
Yeah. I mean, dude, there's so many technologies that are coming up in the next like 5 years that it's insane I feel like every day, it's like we're living in the future.
I agree.
Like,
which is why it's hard to be bearish.
Yeah. When I look back at when I was growing up in like the 90s, what life was like and what life is now when it comes to technology, like right now, technology is just on another level. And I feel like it's accelerating. Do you feel like that?
Oh yeah, dude. Every day I feel like there's more shit. Like, we haven't even seen robotics. Like this is, Chris Camillo, this is one of his big theses right now about this next decade. This is the best time in human history to be an investor, because to invest in something, you need an opportunity, and an opportunity at a global scale that is getting support from every country and sovereign wealth fund and institution. And, you're a couple $100,000, you're $10,000 over the next decade. That will exponentially increase if you invest in the right opportunities. But it's hard to imagine those opportunities fade away because of bond auctions.
I'm surprised Chad didn't say Palantir already does that with the connected cars, or Palantir's already working on it.
Dude, when are you buying Palantir? Are you finally going to just...
When it gets back down to $30 again.
No, come on, Chris. Like, obviously it's chilling in the 120s. It's waiting for you to just step.
It'll get back to the 30s. Don't worry, bro. I have patience. I'm like a monk.
I had a hedge fund manager told me it was falling to $1 yesterday.
I don't know about that one. That's dumb. Like, bro, you got a company that's free cash flow positive, making real money. Like, that's, if it was $1, that would be the most. Yeah, no, definitely not.
Okay, but realistically, give me a real price. It's not 30. Give me like 60. Is that a real price for you?
I think between 30 and 60 would be right.
No, don't give me. Tell me like 60 to 65. That's like that's a 50% drawdown. I don't think you would fade that, right?
No, 30 to 60 is about right. If you think about their earnings are growing, which is good, but the problem is their share count is growing at 6% per year right now. So they have a massive dilution problem, and their top line is growing.
Wait, hold on. You say it's a problem, but the market obviously does not seem to care about that.
Yeah, well, the market gets things wrong, bro. So I'm sorry. The market gets things wrong on upside and downside, and it's our job as investors to figure out which one's which.
All right. I guess we're going to have to see in the future. But I do think their earnings, they're not going to miss on earnings. So I feel like it would have to be more macro to get them down there.
I think the challenge with Palantir is going to be growth in its earnings in the future. I feel like they're stealing a lot of momentum from their future. So the other challenge is because their valuation is so high, their share buybacks are not going to be nearly as meaningful. If let's say you're trading at a 30 PE and you're buying back shares, then yeah, that's like good. Then you can maintain that 30 PE for a prolonged period of time. As your earnings keep growing, you're going to keep doing better. The problem is when you're at 120, 130, your PE is like in the 600s. And yeah, I mean, if you think about like, let's say 100% growth in earnings for the next 5 years, your PE is still going to be accelerated, it's still going to be high. So just from a valuation standpoint, I mean, look, if you want the masterclass on why Palantir should go down, bring on Steve. All right. I'm
Yeah.
not the one. Bring on Steve.
All right. So that's what we got today. Kris, thank you for joining. Chris's Twitter, I'll put in the chat. We'll do that ASTS stream eventually.
Yeah.
Hopefully this week.
Oh, that's hilarious. 600 times earnings is cheap, bro.
Good. Well, if it goes to 1,200 times earnings, then look, at the end of the day, I've said this over and over again. I've acknowledged it's expensive. All of us know, all of the bulls in the chat know it's expensive. Yeah. But there is something in the market, I don't know what it is, that is saying we want to pay a premium. And maybe that is because they feel there's going to be Nvidia level growth over the next decade, given how big the TAM is, the multi-trillion-dollar industry of AI will become. And if Palantir, which only has 769 customers, gets to 7,069 customers in a decade, I think the stock's going to be worth more than 125.
I mean, look, to me, when I see this, I'm like, either it's going to be 120 today or it's going to be 120 in 2030, right? So one of two scenarios happen in that thinking, in that line of thinking. Either you're going to get underperformance for the next 5 years, in which case now the valuation eventually catches up and it actually does make sense to be at 125. I mean, either that or you're going to see a crash down to the 30s and 40s, and it's going to be one of the greatest buying opportunities ever. In which case now you just buy it, hold it, and chill,
Well, one thing is, again, even if it stays flat for the next couple of years, so many of us are up. It doesn't, as you said, we pulled forward the 10x 10 years and 2 years. As long as we don't lose it, I think is what people care about.
Yeah, exactly. I think if that's the mentality that you have with this, then dude, enjoy it. Hell, if anything, get a Fidelity account or a Robinhood account, borrow money against it and chill,
Yeah.
So, yeah.
All right, Kris, thank you. We will talk to you later in the week, and we'll talk more ASTS hopefully this weekend as well.
Have a good one. Take care, guys.
All right, folks, that is it. Long stream today, about 3 hours. We are back in action. Next week is actually going to be really difficult for the market close. So next week, I'm gone the whole week. I'll be in DC on Saturday for the SCSP, which Palantir is presenting at. So hopefully we have a good podcast coming from that event this Tuesday-ish. And then I'm going somewhere else that you guys will find out first week of June. And so the market open will still happen, but the market close, I think, is going to be compromised for at least 3 out of the next 5 days. Honestly, I don't even know if I'm going to be live on June 6th for the S&P announcement on Robinhood. Because if Robinhood gets in, it's not on Robinhood. It's not dedicated to Robinhood. My stream would be dedicated to that, but I don't know if the S&P committee will do it because I might be on a flight. So next week's going to be a little choppy with the market closes, but market opens we should have pretty much every day. And we'll be back in action. And then this week is going to be a big week. Obviously, we had Monday that was off, but we're here for the next 4 days to end out the rest of the week. And Nvidia tomorrow is the big one. I will be live on the channel at 3:30. Tanner and Jose will join me. This is a big one. I've got a big position. Tanner's got a position, and Jose's got, they've been in the stocks since like 2020, 2018. So this will be a fun one, and we're going to try to analyze it the best that we can. Tesla right here, 357. As we ended out, Palantir right here, 124, Nvidia 134.98. And we're going to see what numbers they can put up. But I am optimistic numbers are going to be good. Just not sure if they're going to be better than the estimates that the market is thinking about. Let Chad host. I would love for Chad to host the market close one day. It would actually, I would love Chad or Steve to just like host the show. Yeah, there he is. Okay, he's offering to. All right, we got to get him to, I got to take him up on that offer, bro. I got to give him the stream and just let him talk. It would. So I let not TJ, Jason do that the other day because I had to leave early for something, and Jason still had a bunch of tickers to do on Technical Tuesday. So I just gave him the stream, and I came back after my meeting. He was still there because he loves you guys so much, and you guys kept bombarding him with tickers, and he managed the stream. We got to do that, dude. It gave me an idea that giving the stream to someone for an episode and just letting them manage it. It's going to be a totally different style than what I do, but that's kind of the point. And I think we can deploy more of that, and it should be fun to get other people's perspectives as well. So yeah, that's what we got. the rest of the week, it'll be normal. Market open, market close, daily recaps every day. Nvidia tomorrow. Next week's going to be a little dicey on the close, but market open should happen every single day. And dude, it's May 27th. We have 4 days left of the month. And then we're done. We're done with May. Chat says, I will teach everyone about the ontology for 2 hours. You know, it will probably be the most watched stream because everyone is still waiting for that stream that I said Chad and I would do like 5 months ago. Yes, we need that. We really do need the teaching of the ontology. Chad did that with me and Arnie privately for like literally 2 hours. It was before we went to the first AIP con together around this time last year. And he broke it down and we were like, holy crap. That's not a joke, bro. This is not a freaking joke. And so, yes, we would definitely love to have 2 hours on learning the ontology. But yeah, that's going to be the end of this month. I mean, in 4 days, we're done. And then we head into June, halfway done for the year officially as we get into June. It's kind of crazy, but it's happening. And, after a couple months, June, July, August, we are in my favorite time of the year, September through December. And winter begins and we get the autumn, winter, Christmas, Halloween, birthdays in October, all that stuff. So I think things are moving very fast. Markets were very volatile in April. We dealt with it, the gut-wrenching volatility, but we were able to move on from it. I think we've outlined many, many bullish arguments for why markets can sustain the multiples that they're at right now, why the growth should be good. Q2 earnings are going to be so important because it's the first quarter with tariffs, even though tariffs are kind of leaving by Q3 in terms of how aggressive they were. So it might not even be discounted as heavily, even if earnings aren't the best. Still have some macro headwinds, but overall, if the bond markets calm down, we get more trade deals, and we see earnings growth, I think we have a bull market. And we have a pretty aggressive bull market. Chat says, who says I don't have a bell? Okay, so one of the regrets I have of the Boston meetup, one of the regrets I had is that I didn't freaking give the little bells to everybody. I forgot. I was so busy in the meetup and talking to everybody. The bells were in my bag, and then the meetup was done, and I was like, holy crap, I didn't get to give anyone the little bells. So unfortunately, I did not get to hand out the bells. Hopefully when I come to Boston again, I will bring the bells with me. But I completely forgot. So I am sorry about that. But look, overall, dude, it was really fun. It was really, really fun. It was exciting. Again, so many diverse backgrounds, so many different people. It was just getting to see so many different like people that I had no idea were watching the stream for years. We're watching. And you had one guy who came to Boston just for 2 months. He happened to be here. He started watching me a couple months ago. He showed up. It was a fun little party, and everyone got to come and chill and just be part of the community. So I really am looking forward to the Miami one. Looking forward to doing this over the next over the next decade. This was this lovely lady who works at Nvidia and her daughter, 5th grade, learning about the stock market. I mean, it's just it's so cool, dude. And she was talking with all the other people like she was an investor. It's not like she was sitting in the corner on her phone. Like she was talking to everybody. She had a great personality. So it was just so awesome, dude. It was so awesome, and it was really nice to do something like this. So I'm looking forward to the Miami one that I think will be the next one. And it's one of those things where some of the stories that you hear are also pretty incredible. Like this gentleman right here, he's a single dad now. He lost his wife in 2020, and he's never had a job his whole life. So his wife was the income earner, and he was a stay-at-home dad. He took care of the kids, right? A little bit of a switch of the gender roles that we're typically used to. And his wife, unfortunately, passed away in 2020. He was left in the pandemic with no job. I think he had $100,000 in savings, and he had 2 kids. One of them he had to put through college. What does he do? He finds the stock market. He finds day trading. He finds Palantir. He changes his life, and now he's doing like $20,000 a month. It's just and hearing those stories, I think, are so important because so many of us are in that situation or could be in that situation. But B, just being able to get someone's real life anecdote, going through a horrible time in their life, but being able to turn that into a positive, and then finding a community in what we're doing on YouTube to be able to have a little bit more of just a family-like ecosystem when you're with friends, and then obviously in person when you get to see these people in real life. It's why I do this. It's why I wanted to do this starting in January. It's why I got this idea. And I think it's why we're going to keep doing this for as long as we do this. I really think if I'm doing this for the next 10 years, I don't know why every month we can't have a meetup. Obviously, if I get a wife and kids and life slows down a little bit, then it's different. But for the foreseeable future, I think every month we're going to find a new location. It's part of the reason I'm renting and not buying, because I know I'm going to be traveling so much, and so I don't want to be tied down to one location. And I'm going to try to see as many people as possible. So, going to be super cool. Yes, Chicago. We're going to do Chicago eventually. I think we're going to do UK and Texas in that October, November time. Again, June, July. I didn't know my grandparents were coming from India until like 3 weeks ago. So that kind of took away my June, July meetup plans. But also, again, my grandparents are getting older. The last time they came to America was like 10 years ago. So I really do want to spend time with them. But August, it looks like Miami. And I think that'll be a really fun one. And even if you're not in Miami, maybe if you want to come through for the weekend and explore Miami, that'll be fun to see everybody as well. We did Bay Area in February. Hopefully we'll do Bay Area again next February. I'm usually down there. I mean, dude, I think I'll be in the Bay Area at least like 5 times a year for the next couple of years. Like I've like just, there's always stuff in the Bay Area, whether it's podcasts or anything like that. So, we will definitely do another Bay Area meetup. And now I know the place to do it, because now that I'm getting acclimated to these environments, I have relationships with the bar owners. Like, we can do this every year. Obviously I want to do different locations as well. But if I'm in Boston next year for whatever reason, or, Boston's like, it's a 2-day trip. It was really quick. It was really easy for me to do. So it's not hard to do these types of meetups. When I have to fly somewhere, it's a little bit more planning. But outside of that, I think we can replicate them over and over and over again. Yes, New York in the fall. We did New York already in January, but we'll do that in the fall again. And we'll keep going. Shout out to Brett. He'll be there in Miami. I think a lot of you guys will be there in Miami. I know it's going to be hot. I know it's going to be hot in Miami, but I think it'll be a fun one. So probably late August. By the way, you guys know that mystery guy that I've been talking about on Twitter? That's like a really big personality or whatever. He messaged me 2 days ago after Elon reposted the video to say congrats on Elon reposting the video. And he said, let's definitely do a meetup in Miami. So I don't think he's going to be at the meetup, because I think he's going to have too many security personnel to be out in the public like that. But hopefully we get to meet him in Miami. We'll get to take that picture. And, we'll get to keep expanding the network. I didn't expect him to dude, the amount of people that reached out on this Elon thing, I really, like, it didn't hit me until like he messaged me. And I was like, oh shoot, like people are really like it's a bigger deal than I thought, And so that was kind of cool. Here's the video. I didn't play the video yet, so let me play the video for those that haven't seen the video. It's not Vivek. It's not Triple V. Triple V is hopefully going to be there in Miami anyway, but I will tell you guys once the meeting happens. I want to meet him in person. And again, the reason he even cares about me is because he found Palantir at 30 because of my tweets. He probably invested a lot of money given, his wealth, but I think he's up a lot on that. And that's why he even, reached out to me to say congrats. And hopefully when we meet up, I'll get to tell you guys. So this was the video that Elon shared to 35 million people.
All right, Boston, I'm here. As you can see, although my Knicks, had to do what they had to do.
Dude, imagine you follow Elon and he posts this. You're just like, what is going on here, right? Like the fact that Elon reposted it and the first 10 seconds have nothing to do with Tesla. It was kind of wild. So hopefully if Elon watched the video, he now like knows who I am, and you never know. Hopefully in the future something could happen.
I decided to rep the hat today, although my Knicks are getting clobbered in the finals, so it's whatever. But gonna have the meetup in a bit. Really excited to see everyone in Boston. One thing I just wanted to say is the Tesla FSD ride that I did yesterday, coming from New Jersey to Boston. First time I ever drove 5 hours. I think the most I did before was 3 hours, but that was not an FSD car. Yesterday was FSD, and it was wild. Like I did not have to take control of the car because the car didn't make any mistakes. And it was just insanity. I stopped in the middle to get some food, and that's pretty much it. And then throughout the next 2 hours, I think I stopped 3 hours in. First 3 hours, nothing happened. Next 2 hours, nothing happened. There were some moments where I kind of wanted to take control because I was like, oh, is it really going to make this lane switch? Is it really going to take...
By the way, shout out to the Knicks, though. They won game 3. So shout out to the Knicks. Pacers gave up a 20-point lead.
Take this exit. And it just does it. And it's getting to the point where I'm starting to believe that neural nets and the way Tesla is thinking of AI philosophically and then obviously paradigmatically in terms of the technical execution is supreme. it's better. It's better than everyone else. And now Robotaxi is going to be obviously something hard to scale, but the product itself is so good. And this is why Tesla didn't have to do advertising for so many years, right? If the product is so good, people will inevitably find it. I think this might be the same thing when they unveil Robotaxi. So this was a wild experience. I got 5 hours tomorrow to go back to New Jersey. Not going to hopefully have to intervene again as well. And yeah, I feel like I need more Tesla. I know it's expensive. I know the earnings sucked, but I feel like I need more Tesla.
And I genuinely, I feel that, bro, because like, screw the earnings, bro. If this is the future, like the earning, like who the hell cares about the earnings? But the fact that Elon shared that after I said the earnings sucked, like, I guess he didn't care about the first 15 seconds. He didn't care about the last second of me saying the earnings sucked. He just cared about the testimonial that I literally experienced over the weekend in real time. You know, I'm not some big Tesla guy in the community. I'm not like, oh my God, on my portfolio's all in Tesla. I'm not Sawyer Merritt or Farzad posting this, which is like a bit more of a biased endorsement because obviously they love Tesla so much. They've been covering the company. I am just a guy who bought a Model Y with 0% APR. I love the car and I got to try it for 5 hours with FSD. And that's why I think that's also why he shared it, because it was, you know, just a little bit more of an authentic endorsement of how amazing the product is. So there we go. That's what we got. That's it for me. Again, incredible weekend. Really happy I met all of you guys. I cannot say how much I am in love with this community. I got a bunch of gifts I'll be showing you guys. Shout out to Rich and Kevin, who got me this nice little Boston hat as well. Prakash got me this Celtics. If I drink out of this, all the Knicks fans are going to be bad. This Celtics thing. He also got me this Peter Lynch book. There we go. One Up on Wall Street. A bunch of you guys, when you guys bring the gifts, it's just, it means so much, dude. Like the fact that you even take time to bring gifts and stuff like that. So I think we'll just keep this going. You know, I think we'll just keep this going every single day or every single month. We'll keep doing it. And, yeah, dude, I'm just like more than blessed, more than blessed. There's not much I can say other than I'm very, 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 very grateful that people feel so compelled in these communities to actually show up and do these things. Again, you know, it's a weird, like a lot of strangers just meeting up in a bar, right? Like, what does that mean? Like, and especially over like a lot of there, I can understand the hesitancy of like, I have no idea what this is. I'm showing up to this, but once you show up, like within seconds, dude, the energy is electric every time. People just find their little niches and they start talking. And then I'm just going around trying to talk to everybody, learn about, there was someone who's a philosophy major who was like, I didn't know about Palantir, but I read Alex Karp's dissertation when I was in college getting my philosophy minor, which is great. And then I heard you're talking about Alex Karp on Palantir. And then like I put the connection together and then I bought the stock. And it's like, it's crazy the stories that I've heard. And it's just so much fun. It's so much fun to get people coming together. Shout out to Timothy. I believe if this is Mr. Timothy from Taiwan, the dude flew 20 hours from Taiwan. Like, I don't know what to say about that. 20 hours. Like, it is just for, and you know, it was just for the meetup. It wasn't to go see New York or see Boston for a month. It was literally a 2-3 day trip. So it really, really, I do not take that for granted. I think that the purpose of what we're building here is so much more special, so much more greater than myself or the stream or the content. It's about a genuine, authentic community, which is all we want in life, right? All of us, yeah, Timothy is definitely Timothy right here. All of us just want to be accepted. And we want to find a way to be accepted. And in this world that we're all in investing, there's not a lot of people to accept us because you either have the hedge funds that have their own world, you have the Chamaths of the world that think retail is all stupid and he's parties with his billionaire friends. And your family and friends probably don't care about it. So the only thing you really have is this online community of hopefully people that are like-minded and respectful and they care about each other. And then from bringing that online to the real world, I think is like, it's just the coolest thing. And it really, it's a bit emotional for me because it is fulfilling, right? Like that's another thing we're searching for in life. We're looking for fulfillment in life. And you get fulfillment through love and through, relationships, through kids. You get fulfillment from the most, the part that most people don't get to experience, which I'm unbelievably grateful for, but doing what you want to do every day, right? It's not easy to get fulfilled from your work. And a lot of people are working things that they don't get fulfillment from. So being able to even get a little bit of happiness and joy from the thing you're spending most of your life on, that is incredibly fulfilling. That is incredibly satisfying. And it makes you feel like you're doing something with your life. And these meetups, again, they remind me like, this is why I'm doing it. The level of love and energy and attention that everyone gets to feel in this meetup, whether, You know, there were some people who are not even investors. There were some people who like are learning. There's like a 22-year-old who's like just learning about investing. He doesn't have a single dollar invested in the market, but he was talking to people about like, and then you have people who have, you know, there's one guy who's printing like $40,000 a month off covered calls because he has a multi-million-dollar portfolio. So the fact that him, one guy who's not investing, one guy who's making hundreds of thousands a year can talk and share the bond and the connections and network, that to me is what's really special. It's really, really, really special. And I think if we can, you know, take this across the entire globe, then we're just going to be able to keep this as special as it is. So super, super awesome stuff. Thank you, everybody, for being here. It was great. It was fun. Looking forward to doing the next one. Elaine, shout out to you. Elaine was in the California meetup. She got to experience the second meetup of the year, and her energy was amazing. I remember I walked in and she gave me a big hug, and I'm like, who is this lady? And she's like, I have a lot of Palantir because of you. And I was like, all right. She's like, I can tell why she's happy, but it's cool, dude. It's really, really, really cool. And again, the Palantir early OGs, I am shocked by every meetup I go to. They show up, and there's one guy, I think his name is Rich. He sold all of his portfolio in 2024 May, Mother's Day. That's when Palantir fell 20%, and he bought Palantir at $20. He sold everything. I think he's like in his mid 50s, and he's even invested in Ford and all these GM and all these like random companies from like the 2000s that he put money in. He got rid of everything, all in Palantir at 20. You know, it's worked out. And it's just like, it's that catalyst that also creates the necessity for people to want to connect and then learn about a Grab or a Hood or a Tesla. There was a bunch of Tesla bulls there. It's the essence of what a community should be. And I just want to keep that going for as long as we do this. So there we go. Word of the day. Let's see what we got outside of grateful, which is really what I'm feeling, especially after these meetups. Again, it's very emotional every time. It's hard to put into words, but every single time after a meetup is just very, very grateful that we have this community and this is happening across the world. Word of the day is siesta. A midday or afternoon rest or nap. I've definitely heard this word before. A gentle breeze and a shaded bench made for the perfect impromptu siesta. After lunch, the whole village seemed to vanish into a collective siesta. Well, I was definitely taking a siesta, but it was more of a sleep versus a nap when Elon reposted the video. And so I didn't see it until 5 hours later, but I was in some deep sleep. I woke up, saw the video, and got to see all the comments hating me for wearing a Boston hat. So, dude, it really was funny though. Some of these comments, bro, like there was a lot of you guys tagging me, and that was great. And then there was these other comments that are just like, this guy is the worst person on earth. His sports takes are irrelevant. I don't care what he said about Tesla. He's wearing a Boston hat, but he's a Knicks fan. Like these Boston fans or these sports fans, dude. But see, this is my point. The fact that you have sports fans that are so aggressive in the comments because of what I said about wearing a hat in a city for a team that I don't really support. And they're making no money if the team wins or loses. I would rather be passionate about a Palantir or a Robinhood or whatever stock, because at least my passion translates into money going higher, like my net worth going higher, or my net worth, taking a big hit in April. But the point is, there's something to benefit from. Whereas if you're so obsessed with sports and you're pissed off about a guy wearing a hat, which again, it's all in good fun, but still there were some people that were aggressive. I'm like, dude, like if you had all that energy in the markets, maybe that energy would be more financially beneficial towards everyone else. So that's what we got. Wear the hat, the Knicks suck. Dude, if we come back from the Pacers, it'd be aggressive. Plot twist, he doesn't even watch the sports. That's true, dude. I watched the last 5 minutes of all these games just to see if the Knicks can win. All right, cool. That's it. Thank you, everybody. We will be back on the market close. Come to Berlin. I've got the best story. Hopefully, we're doing Europe in 2026. Hopefully, we just got to get some of that planned. Maybe the UK towards the end of the year. But Europe and Singapore is a big goal for 2026, and we will keep these meetups going. All right, thank you, everybody. I'll see you guys on the market close. Also, today's Tuesday, Technical Tuesday, so it'll be a long market close as we go through all the technicals. Bye, everybody. Have a good one.